Hello friends. Now we have finished off with the chapters of ratios, leverages, capital structure, cost of capital, and also the chapter of capital budgeting. Now I would like to take up the next chapter, which is the chapter of risk analysis in capital budgeting. There are three chapters that are newly incorporated. There are three chapters that are newly incorporated in the intermediate syllabus, and one of them is risk analysis in capital budgeting. So let us understand what exactly are we supposed to do. So we have risk analysis in capital budgeting. Risk analysis in capital budgeting. Now let's understand, friends, what exactly is the meaning of the term risk, and then we will take ahead. Now, first of all, how would you define the term risk? Risk, friends, is nothing but difference between or deviation between our expectations and actuals. If what we expect is what we are going to get, then there is no risk at all. Sir, means what does it mean? If suppose I tell you that we expect we have 1 lakh rupees and we are planning to invest that 1 lakh rupees in a bank, and the bank says that they give us 8% interest. Now we invest with an objective to earn 8%, and bank is also going to give you 8%. Now after 1 year, will you be getting any returns other than 8% or exact 8%? 8%. What are you expecting? 8%. What are you getting? 8%. So we say that there is no risk in it, because what we are expecting is what we are getting. But whenever what you expect and what you are going to get are two different things, then risk exists. हम लोग बोलते हैं शेयर मार्केट में पैसे इन्वेस्ट करना रिस्की है. क्यों? क्योंकि अगर आप शेयर मार्केट में पैसे इन्वेस्ट करोगे तो आपको लगता है कि सपोज यू कैन अर्न 15%, बट इज इट नेसेसरी दैट द मार्केट विल गिव यू 15%? No. Either you can earn returns which could be more than 15%. It is quite possible that your capital even might get wiped out. So that is what is the risk all about. Risk is actually nothing but difference or deviation of our expectations and the actuals. So this is the definition of the term risk. Now, how would you tackle risk in capital budgeting? To make you guys understand, let me straight away start with an example. Of all the methods which we have discussed in the chapter of capital budgeting, all the methods, which method is the best? You would definitely say, sir, it's the NPV which is the best method. How is NPV calculated? Simple, PVCI minus the PVCO. That's going to give you the NPV. So if I calculate the NPV, and if I take a typical NPV example, then how would NPV look like? It goes like this. See, if I plot the data on a timeline, so let's presume there is one project. That project is having a life of say 3 years. That project requires an outflow of rupees 1 lakh today. So this is an outflow, and I expect that this project will give me cash inflows of rupees 40,000, 50,000 and 60,000 in year 1 and 2. Tell me, friends, are these actual cash flows or estimated? We are done with capital budgeting, so please think about it and tell me, are these actual cash flows or estimated cash flows? These are all estimated cash flows. All estimated cash flows. Now, this is an outflow today. These are cash inflows that will occur in future. Now, we all know that future value cash inflows and present value cash flows are not comparable. So to make the stuff comparable, what am I supposed to do? I would have discounted it by using the discounting factor of year 1, so 1 plus KO raised to 1, 1 plus KO raised to 2 discounting factor, 1 plus KO of discounting factor of the third year. Then I would have added it and then I would compare it with the PVCO. If the present value of these cash inflows exceed the present value of cash outflow, I would have said go for the project. Now, so what we were doing till now, we were only calculating and comparing, and we were just taking decisions solely on the basis of NPV. So I can say we were only taking the decisions on the basis of reward. So NPV is like a reward only. आप जो पैसे डाल रहे हो वो पैसों के ऊपर आपको और कितने पैसे मिल रहे हैं in present value term, that was your NPV. So till now I have only selected and taken decisions purely on the basis of NPV, on the basis of reward, completely ignoring the risk of the project. Now tell me friends, when you invest your money anywhere, do you take only the reward as the criteria for investment? No, not at all. To take decisions, reward is not the only criteria. You also have to incorporate risk in it. You also have to analyze your investment, that how much risk is there in that project. So here what we were doing, we were only taking decisions purely on the basis of reward, completely ignoring the risk of the project. So this chapter of capital budgeting risk analysis will now analyze the risk of the project in that capital budgeting. So whichever project you are planning to go for, you will be now calculating how much risk is there in that project, whether it is satisfying your risk appetite. If yes, then you should go on the project not only just on the basis of reward also, but on the basis of risk. So this chapter can help us to take informed decisions. Rather than selecting the project purely on the basis of NPV, you can also incorporate risk in that, and you can check whether it is satisfying your risk criteria or not. If yes, then go for this project on the basis of risk as well. Now again, I would like to ask the same question. What do we understand by the word risk? What does the word risk in capital budgeting means? I have defined the term risk for you friends. Risk is nothing but difference between our expected cash flows and actual cash flows. Now these are my expectation. This is what I expect to get. Actuals bhi yahi rahega kya? If I launch the project and if I initiate the project, do you really think this is what I'll get? No. Hence, I would say there exists a risk in these cash flows, because this is what I'm expecting. What I'll get actuals would be different. So deviation from your expectation is nothing but risk. So now what should I do friends, and what we are going to do in this chapter? This chapter of risk analysis in capital budgeting will teach us, it will teach us how to minimize the risk. So we have to learn risk. So this is purely on the basis of reward. ये chapter मुझे क्या सिखाएगा friends? This chapter will teach us techniques which will help us to minimize the risk. So we have risk minimizing technique, risk minimizing techniques, which would include, I say, RADR technique, risk adjusted discounting rate. Then we have certainty equivalent method. These two methods are the ones that will help us to minimize the risk. There are two methods which will also help to measure the risk. So we have risk measurement technique. Risk measurement technique, and that is going to include what? It will include probability distribution approach. So we have probability distribution approach, and then we also have decision tree analysis. Then we have to learn the third segment, that is going to be, that is not a risk measurement or minimizing technique. These are analysis of variables, affecting NPV. So now here I would say we have a sensitivity analysis, and we have simulation analysis. So this is actually speaking the scope of the entire chapter. So you understand, friends, every project has its own risk. Again, I'm telling you, the word risk means what? This is what I am expecting the project to generate. It is not necessary that this is what it will generate. Is it possible that it is going to deviate from my expectation? If yes, then by how much? So that is what I need to find out. So I'll have to learn to minimize that risk. I have to learn to measure that risk. And the last one would be the analysis of variables that affect the NPV of the project. So these won't measure the risk of the project. They will just analyze that what are the variables that affect the NPV. Now I'll be following almost the same chronology for taking the entire chapter of capital budgeting and risk analysis. Now I hope you people have understood what is the basic motive. The basic motive is very simple. Any investment criteria should never be analyzed on the basis of just the rewards. Agreed, reward is lucrative thing, but reward के साथ साथ risk भी लेना पड़ता है. So you also have to analyze the risk of the project. So you need to check the risk of the project. So to analyze the risk of the project, even I need to know how much is the risk in the project. So I will learn how to measure that risk. We have some techniques that will help us to minimize the risk and so on. So this is going to be the scope of the chapter. So we have to learn these techniques. So let's begin with the first one, that is the risk adjusted discounting rate. Then I'll move on with certainty equivalent factor and sums that are related to these techniques. Okay, so let's begin with the first method, that is going to be the risk adjusted discount rate. Now that is also called as RADR, risk adjusted discount rate, RADR. Now to understand this, let me straight away start with the same example. I have not erased the example, it's there in front of us. So let me begin with the same example, what it says. Consider again a typical example of NPV. If you notice, how is NPV calculated? All future value cash flows are discounted and they are brought to present value by using a discounting rate. And what is that discounting rate? The discounting rate is nothing but KO. The discounting rate is nothing but KO. And how do you define KO? Can I say it is nothing but the desired rate of return of the investors, the minimum returns which the investors expect on their investment is profits to the investors, but it is cost to me. So I discount these cash flows using your desired rate of return. Now friends, if risk in a project will be more, what will happen to your desired rate of return? Can I say you will also desire more rate of return? So cash flows of a project which is having more risk, the cash flows of that project should be discounted at a relatively higher discounting rate as compared to a project which is having less risk. How do you measure how much is the risk of the project? For measuring the risk of the project, we have statistical tools of standard deviation, coefficient of variation, beta factor. All these are measures of risk. For better understanding, let me explain you with the help of an example. When this subject was there at final CA level, capital budgeting risk analysis, there was one fantastic sum in final CA level about deciding a place where to start this business. There were two areas given in that question. One was forward area, the other is backward area. So it is we who was supposed to decide whether we should locate our project in forward area or whether we should go for backward area. So we have a choice, either we can locate it in forward or in backward area. Now, so let's presume we have this forward area and we have this backward area. So if I now tell you calculate NPV of this forward area, so how will you do that? You will take PVCI minus the PVCO and then you calculated the NPV. Now, how did you get this PVCI? All future value cash flows, future में जो भी cash inflows मिलेगा, if the project is located in forward area, those future value cash flows were discounted at your desired rate of return of KO. That was desired rate of return. And whatever is your desired rate of return, can I say that becomes cost to me? So I discounted these cash flows. मतलब मैंने क्या किया? Future value cash inflows को मैंने discount किया KO से. So the same thing I would have done it here also. Future value cash flows I would have discounted it with KO. Let me presume KO was say 10%. So tell me chartered, for discounting these cash flows, whether the project is located in forward area or whether it is located in backward area, for discounting these cash flows, did we ever use different discounting rates? Have we used different rate of discounting for discounting the cash flows of different project? No, we were using the same desired rate of return, the same cost of capital to discount the cash flows. And then we calculated the NPV. Now suppose the NPV here comes 10 lakh rupees and the NPV here comes 12 lakh rupees. So if I would have asked you the question, which project do you think we should go for? Should we locate a project in forward area or should we go for backward area? You would have clearly instructed me, sir, go for backward area because NPV here is more, assuming life is the same. So NPV here is more, so we go for forward. We go for backward area because it is giving us a higher NPV. But can I say this time when you have taken a decision, just by calculating and comparing the reward, it's giving you a higher reward, so we should go for this project. You did not bother to check risk of locating the project in backward area. Now how would I calculate that risk of locating the project in forward area and backward area? That is a later part of discussion. But now suppose I say locating the project in backward area, no, there is going to be a lot of risk. There would be transportation problems, there would be electricity cutouts and all that thing. So there's going to be a lot of risk of locating the project in the backward area. So risk of locating the project in backward area is more as compared to forward area, but reward is more. So if I now ask you, decide which project would you go for? So how would you think here? If you are following RADR technique, what will you do? I now tell you publicly, forward area mein locating the project in forward area, it is having less risk as compared to backward area. If the project is located in forward area, then you desire say 10% rate of return. But if the project is located in backward area, since locating the project in backward area is going to have a lot of risk, will you desire the same rate of return? You will say, no sir, since the project is located in backward area, our desired rate of return will increase because risk of locating the project in backward area will increase. So what will you do? Since now you guys desire a higher rate of return, if I locate the project in backward area, I would discount these cash flows not at 10%, but I will discount it at a higher rate. So now what, let's presume I discount it at 15%. Now this time, if I'm discounting at 15%, my NPV comes to say rupees 8 lakh. So if my NPV is 8 lakh, this NPV now will be termed as risk adjusted NPV. Because how am I adjusting that risk, friends? How am I adjusting that risk? I'm adjusting the risk by adjusting my discounting factor rate. And if you adjust the discounting factor rate and if you calculate the NPV so calculated is going to be termed as risk adjusted NPV. And if I now tell you select the project, then you would say, sir, it's better to go for project locating in forward area. Why? Because it is going to give me a higher RANPV. So what happens, friends, in RADR technique? In RADR technique, first of all, what happens in NPV technique? In NPV, all cash flows are discounted by using a discounting factor rate, that is the desired rate of return. Discounting factor rate, that is going to be KO. That is always KO. But what exactly is this KO? The KO is exactly nothing but the desired rate of return by whom? By the investors. So if I now say a project is having more risk, higher would be your desired rate of return. If your desired rate of return will be increased, can I say I should then discount the cash flows of a risky project? I should discount the cash flows of a risky project with a relatively higher discounting factor rate as compared to a project where there is less risk. So you just have to understand one thing. You incorporate risk in the project here. You take into effect the risk factor by just adjusting the rate of discounting. So project with a higher risk, cash flows of that project should be discounted at a relatively higher discounting factor rate as compared to the project where risk is less, and then the NPV is calculated. The NPV so calculated is going to be termed as risk adjusted NPV. What becomes the decision rule? If RANPV is positive, accept. If it is negative, reject. If it's zero, indifferent. In case of multiple projects, select the project which gives you highest possible RANPV. Did you get that? Pakka? Fine. So what do you think is the advantage of this method, RADR technique? इस method का speciality क्या है? Speciality and advantage is only one thing. It's easy to understand and simple to calculate RANPV. What you have to do is, friends, see the discounting rate बढ़ा दो बस. You just have to increase the discounting rate on the basis of the risk of the project. Now, what are the limitations of this project? Or rather, what are the limitations of this method? What are the problems associated with this method? The first and the biggest problem of this method is it is adjusting the discounting rate. In this method, what are we doing? We are adjusting the discounting rate, and we are not adjusting the cash flows. It is the cash flows which are having more risk. It is the cash flows which are having more risk and not the discounting factor rate. So ideally adjustment should have been done to these cash flows and not the discounting factor rate, but adjustment is done onto the discounting factor rate. So that itself is limitation. Risk किस में? Discounting rate में कि cash flow में? Deviate क्या होगा? Discounting factor rate या cash flow? Cash flow. So ideally adjustment should have been done to cash flows and not to the discounting factor rate. So this method adjusts the discounting rate. So that itself is limitation. The second problem is by discounting the cash flows of the project with same discounting rate, by discounting the cash flows of this project by using the same discounting rate, we assume similar risk prevails for each year's cash flow. I will repeat, एक ही discounting rate ले रहा हूँ, भले 10 तो 10, 15 तो 15. So this will, if suppose it is backward area का NPV, I'll discount it at 15%, discount this also 15%, discount this also at 15%. It means I'm assuming similar risk exists in each year's cash flow. And it is not necessary that every year's cash flow from the project will have same risk or similar risk. So that itself is limitation of RADR technique. In short, I would say this way: if you adjust the denominator, then you are following RADR technique. If you adjust the numerator, then the method that is being followed is certainty equivalent method. ठीक है? So I believe everyone has followed what is this RADR technique. We have one sum that is based on this RADR technique. Let's finish off that sum on risk adjusted discounting rate. So I would summarize my discussion about RADR technique like this. In NPV method, the discounting factor rate used to discount the cash flows is KO, which is nothing but the desired rate of return of whom? Of the investors. If risk in a project is more, higher would be your desired rate of return, and hence the cash flows of a risky project should be discounted at a relatively higher discounting factor rate as compared to that project where risk is less. But sir, how will you come to know which project has more risk or less risk? We can use statistical tools of standard deviation, coefficient of variation, beta factor. High standard deviation, high coefficient of variation, and high beta would indicate more fluctuation in the cash flows, and when the fluctuations in the cash flows is more, that itself indicates more risk. How it is to be calculated, that is later part of discussion, but this is what we need to do. Decision rule: if RANPV is positive, accept the project. If it is negative, reject. If it is zero, indifferent. In case of multiple projects, select the project which gives you highest possible RANPV. Advantage of RANPV: the advantage is very simple. It's simple to understand, easy to calculate RANPV. Limitations is, the limitations are, it is adjusting the discounting rate and not the cash flows. It is the cash flows which are having more risk and not the discounting rate. So that is a problem with this method. And the second is, by discounting the cash flows with the same discounting rate for each year's cash flow, we presume similar risk exhibit for each year's cash flow. So this is what is a problem. Okay? We have one sum on RADR technique. Let's take up. That was a sum that had come at final CA level as well. So let's read and finish it off. Question number 1. Let's read it. Determine the risk adjusted NPV of the following projects. So the question says determine risk adjusted NPV of the following projects. So how many projects are there, friends? We have 3 projects, project X, Y and Z. We have the net cash outlays. For project X, we have 2,10,000, Y it is 1,20,000, Z it is 1 lakh. Life of the projects is given to be 5 years. We then have the annual cash inflow and coefficient of variation is given, CV is given. The company selects the risk adjusted rate of discounting on the basis of coefficient of variation. Now underline and understand this table. If coefficient of variation is 0, then the discounting rate that is going to be used to discount will be 10%. The cumulative factor of that is 3.791. If coefficient of variation is 0.4, then the RADR is 12% and its cumulative factor is 3.605, and same information is given for the other cases as well. So it is we who are supposed to find out RANPV. So my heading will be what? Calculation of RANPV. So for each of the projects I am supposed to calculate this RANPV, and we have 3 projects, project X, project Y and project Z. तो सबसे पहले तो मुझे चेक करना पड़ेगा कि इनका CV क्या है. Let's see what's the CV. So we have coefficient of variation. For project X it is 1.2, this is 0.8 and this is going to be 0.4. Now, what is the next thing? On the basis of this CV, I'll be selecting the discounting rate. If the CV is 1.2, then you notice the discounting rate that will be used to discount the cash flow here is 16%. First of all, tell me which project among the 3 carries maximum risk. Jiska zyada CV, uska utna zyada risk. So here it's going to be we'll discount it at 16%, 0.8 we will discount at 14%, and 0.4 we will discount at 12%. Samjha? And now I will calculate the NPV for these respective projects. Project X and Y, I'll do it. Z, you can practice it on your own. So first, we have to calculate the RANPV. So that works on the same premises. We will definitely go for project X. Now, if you go for project X, then what is the cost of the project? Please check. How much is the cost of the project? It is having a cost of rupees 2,10,000. Now, if selected, this is going to have a life of how many years? 5 years. So, are you mad to invest this 2,10,000? No. Why are you investing? Because you know that if you invest this 2,10,000, it will help you to generate benefits, which will be in the form of cash inflows. How much cash inflows you will get every year? I will be getting 70,000 rupees every year for a period of how many years? 5 years. Can I say it takes form of an annuity? So my second step here will be to bring that stuff in present value. So I'll take annuity and then I'll multiply it with PVAF at what rate? At that respective rate of discounting for 5 years, as the life of all these projects is 5 years. तो यहाँ पे मैं क्या करूँगा? 70,000 को I will discount it with PVF at what rate? At 16%. For how many years? 5 years. That's already been provided by the question to us, and that is 3.274. So that is going to give me the present value of my cash inflows. So I would say 70,000 into 3.274, that's giving me 2,29,180. So I can mark this thing here as A, this can be marked as B. And the third and the final step now, any salvage, please check, any salvage? No, I don't have any salvage. So now my last step is to just compute that RANPV, which is going to be again PVCI minus the PVCO. That's going to be B minus A. So this 229,180 minus 2,10,000, that's going to give me 19,180. Samjha? So this is what is going to be my RANPV. Ab, next. The same calculations or similar calculations will follow for project Y as well. So we have cash outlay of rupees 1,20,000. How much cash inflows I expect here? 42,000 into PVAF at R% for 5 years. At R% for 5 years, this is 14%. 14% for 5 years, this is 3.433, and that's going to be 42,000 into 3.433. So that's giving me how much? 1,44,186 minus that PVCO of 1,20,000. So I get 24,186. Now similar calculation, friends, you can do it for the last project, project Z, and then what we can do is, here in this sum they have not asked us whether we should select or reject the project. But if they would have asked us to select or to reject the project, then what I would have done, I would have just calculated the NPV, RANPV for project Z, compare whichever would have given me highest possible RANPV, I would have naturally selected that one. Did you get this? So select the project where RANPV is maximum. Very easy technique it is, friends. So in this technique, what we will do, for different projects, we will have different discounting rates. The project which is going to have a higher risk, it will be discounted at a higher discounting rate. That's the only thing that you need to remember in RANPV. So this was RANPV, and you can just have a look at the solution. This is the part of the solution for that solution to question number 1. Project Z, I would appreciate you can do it on your own. That is also manageable. You just have to write down these values that are respective for project Z. Okay? Okay. Now, so we are done with the method of RADR. Let me take up the next one, that's going to be the certainty equivalent method. So we have certainty equivalent method, that is CE. Now, if you recollect one statement I made when I was discussing RADR technique, I said if you adjust the denominator, then the technique that you are following is RADR. Contrary to that, if you adjust the numerator, then the technique that you're following is certainty equivalent factor. So in this certainty equivalent factor, we will not adjust the discounting rate, rather we will adjust the cash flows, and then we will calculate the NPV of the project. Now, let me take up the example here for better understanding how and what happens in certainty equivalent. Now, suppose again there is one project which has a life of say 3 years. It has an outflow of rupees 1 lakh today, and I expect that this project will give me cash inflow of 50,000 in year 1, 60,000 in year 2, and let's presume 80,000 in year 3. Now, let me take it this way. Are these actual cash flows or estimated? Purely an estimate. These are what estimates I have made on my own. Now, let's take it this way. I am an amateur person. I don't know the techniques of capital budgeting. So I have approached professionals, experts like you guys, and I want you guys to do the analysis of this project on my behalf. I did make fair guesses on my part that the life of the project is going to be 3 years, and I expect this is going to be having cash inflows of 50, 60 and 80,000 respectively. But I don't want to take chance. These are my best estimates. So I approach you guys who are having, ocean of knowledge about capital budgeting, and I told you, Arey yaar, I am planning to start this business, and this is what I expect to get from my business. If it will be possible for you, could you please tell me where am I going wrong? So you will take the cash flows and then you will do the analysis on your own. Now, so I am an amateur person and I don't have much knowledge about the capital budgeting techniques. So I have come to you who are professionals who have a vast knowledge of capital budgeting, and now I seek your advice. I have given my cash flows, I have given my fair guesses and best estimates, and then I approach you and you tell me the following things. You asked me, or rather let me change the situation now. I will ask you some questions, think and then give me the answers. This is cash outflow. Is this certain कि इतना जाएगा ही? Is it certain or uncertain? Is it certain or uncertain? इतना जाएगा कि नहीं? जाएगा ही. तो then I can say there is 100% chance तो कि ये 1 lakh तो जाने वाला ही है. Then you told me, अरे what a nonsense estimates you have made. My experience says for a project like this which you have evaluated, then you can get say 45,000 rupees in the first year, considering the project in which you are planning to make. And since I have vast knowledge in capital budgeting techniques, in the first year, believe me, you will get 45,000 rupees. This is what you will get from the project. In the second year, you will be getting 36,000 rupees, and in the last year you will be getting 40,000. See, first question, let me hide these things. Is this certain or uncertain? Are these certain cash flows or uncertain? Certain, jayega hi. Acha, are these certain or uncertain? Can I say we are uncertain? We are uncertain about this. So now when I'm asking you as a professional, you say certain, 46,000 to milega. There is certainty, bindas, guaranteed. Is project mein 45,000 to milega hi. In the second year you say guaranteed, considering my experience 36,000 to milega hi, and here you will get 40,000. So what are you doing, friends? Can I say from these uncertain cash flows, from these cash flows which are uncertain, you are eliminating that uncertainty, and what you are now getting is these certainty cash flows. And how did I get these amounts, friends? What's the logic behind this? This was certain, so I can say its certainty equivalent factor is 1. I am now multiplying this 50,000 with something called as 0.9. 9 5s are 45, so I'm getting, so there is 90% certainty that you will be getting 45,000 now, and this is now going to be 0.6, whereas here it's going to be 0.5. So what are we doing, friends? We are converting uncertain risky cash flows to certain risk-free cash flows, and that is done by using certainty equivalent factor. We are converting uncertain risky cash flows. क्या ये cash flows में risk है? तो मैं क्या कर रहा हूं, by multiplying it with certainty equivalent factor, I'm converting these uncertain cash flows to certain risk-free cash flows. And then what will I do? These risk-free cash flows are going to be then discounted and they are going to be brought to present value. And then the NPV of the proposal will be calculated. The NPV so calculated, if it is positive, I would go for this project on the basis of certainty equivalent, else I would reject it. So what do we do, friends, in this method? In this method, all uncertain risky cash flows are converted into certain risk-free cash flows by using certainty equivalent factor, and believe me, the certainty equivalent factor will be given to you in the question. So you use this, convert uncertain to certain cash flows. These certain cash flows are to be now discounted and brought to present value, and then we calculate the NPV. Now, one fine point that I would like to discuss with you guys is, to discount these cash flows, we need a discounting factor rate. Tell me honestly, here the discounting factor rate that I'm going to use, would be which one? Which one do you think should be used as a discounting factor rate? Obviously, risk-free rate. Why risk-free? Because can I say from this cash flow, मैंने uncertainty हटा दिया है. There's no uncertainty. Now these are certain. So these certain cash flows are risk-free cash flows, and hence these are to be discounted by using risk-free discounting factor rate. समझ रहा है मैं क्या बोल रहा हूँ? So these uncertain cash flows first will be getting converted into certain risk-free cash flows. These risk-free cash flows are to be then discounted by using a risk-free discounting factor rate. The logic, the idea behind using risk-free rate of discounting is what? Since in the cash flows we don't have any risk, so the discounting factor rate that should be used for discounting should also be risk-free. And then we calculate the NPV. The NPV calculated, if it is positive, we would go for the project on the basis of certainty equivalent, else we would reject it. Did you get this, friends? Pakka? Fine. Now, next question. What is your opinion? Higher certainty equivalent indicates more risk or less risk? Higher certainty equivalent factor, higher the risk or lower the risk? Lower the risk. Because when certainty equivalent factor is more, can I say uncertainty is less? And when uncertainty is less, we can conclude risk will be less. So high certainty equivalent factor indicates low risk, because high certainty indicates low uncertainty. Is it okay? So keep the stuff that we have discussed in mind. We have again couple of sums that are to be solved, that are going to be on the basis of certainty equivalent method. Once that is done, then we can proceed with the probability distribution approach as well. So let's take up the next one, that is a sum on certainty equivalent method. That's question number 2. Question number 2 now. So let's read. The Textile Manufacturing Company Limited is considering one of the two mutually exclusive proposals. My dear friends, tell me, what do you understand by the word mutually exclusive? What do you understand by the word mutually exclusive? Accepting one automatically leads to rejection of the other. We cannot select both the projects at the same time. Project M and N, which requires cash outflows of rupees 8.5 lakh and 8,25,000 respectively. The certainty equivalent approach is used in incorporating risk in capital budgeting decision. So it means the organization is following certainty equivalent approach to incorporate risk in capital budgeting. The current yield on the government bonds is 6% and this is used as risk-free rate. The expected net cash flows and their certainty equivalents are as follows. So we have project M and we have project N. So we have year-wise cash flows and we have their certainty equivalents respectively. Present value factor of rupee 1 discounted at 6% at the end of year 1, 2 and 3 are 0.943, 0.890 and 0.840 respectively. Required. Which project should be accepted? If risk adjusted discounting rate method is used, which project would be appraised with a higher rate and why? So the required part of the sum is which project should you accept? Now they have not specified the method. Now whenever method is not specified, the best method of all is the NPV. But for calculating NPV, we have to take into consideration certainty equivalent here. So now we will first again decision making process. That chart you remember which I taught you in capital budgeting. Is it a sum on selection or replacement? It has to be a sum on selection here. So next, do we have income information? Yes, cash inflows are given. So we can very well calculate NPV of project M and N. Are life different? No. So there's no need to annualize. So we'll just calculate the NPV and we will incorporate certainty equivalent as well. So let's understand how do we calculate this for project M and N. So now I'll give the heading here, calculation of NPV. For project M. Now let's understand for project M. Same procedure friends. I will definitely go for this project M. If I go for project M, then right now from my pocket kitna jayega? What is the cost of the project? The cost of the project is 8.5 lakh rupees and this is to be marked here as A. Now, are we mad to invest such a huge sum? Of course not. We will invest with an objective to generate benefits and benefits will be in the form of cash inflows. Now, are the cash inflows given? Yes, they are given. And we have cash inflow of 4.5 lakh, 5 lakh and 5 lakh for years 1, 2 and 3. So year 1, 2 and 3. अब उन्होंने जो मुझे 4.5 lakh rupees दिया है यहाँ पर and 5 lakh and 5 lakh. Are these certain cash flows or are these uncertain cash flows? Obviously, these are uncertain cash flows. Now, since we are incorporating certainty equivalent in this, what will I do? These uncertain cash flows will now be multiplied with certainty equivalent of 0.8, 0.7 and 0.5. The moment you multiply these uncertain cash flows with certainty equivalent, you will be getting certain cash flows. So we have certain cash flows. And let's calculate these certain cash flows here. So I would say 4,50,000 into 0.8, that's giving me 3,60,000. 5 lakh into 70% is 3.5 lakh. And this is 2,50,000. Now what will I do? These certain cash flows are going to occur in future, which will now be discounted by using the risk-free rate. And the discounting rate given is at 6%. And fortunately, we do have these values given by the question. That's going to be 0.943, 0.890, 0.840. So when I now calculate, this is to be marked as B. That's going to be the PVCI. So 3,60,000 into 0.943, 3,50,000 into 0.890, 2,50,000 into 0.840, and then we get the grand total. That's going to be 8,60,980. Any salvage value? No, we don't have any salvage value. So the third and the final step would be to compute this NPV, which is going to be PVCI minus the PVCO, and that's going to be B minus A, and that is how much? 10,980 rupees. That's positive figure. Now if we have a positive figure for project M, same calculation we would then do for project N. Compare wherever we get a higher NPV, we'll go for that. So let me finish off fast the calculation of NPV. For project N. Now if I select project N, then what is the cost of this project? 8,25,000. So we have a PVCO cost of the project 8,25,000. Now this is to be marked here as A now. And fortunately we have been given the cash flows from project N as well, and their certainty equivalents are also given. So same exercise we have to repeat, friends, now. So this time we have again the PVCI year wise, year 1, 2 and 3. Uncertain cash flows are given, uncertain cash flows. So this time it is 4.5 lakh. We have 4.5 lakh here as well. We have 5 lakh. Now what's the certainty equivalent here? This time the certainty equivalent is 0.9, 0.8 and 0.7. Now what will I do? Uncertain cash flows will now be multiplied with the certainty equivalent factor to get the certain cash flows. So we get 4.5 lakh into 0.9, so that's going to be 4,05,000. So this is going to be 3,60,000, and this is 3,50,000. But these are certain cash flows, agreed, but they won't come today, they'll occur in future. So what will I do? I'll discount it and bring it to present value by using the discounting factor rate again here of 6% to get the present value. So this is what we already know: 0.943, 0.890, 0.840. So we say 4,05,000 into 0.943, that's 318,915. 3,60,000 into 0.890, that is 3,20,400. 3,50,000 into 0.840, so that is 2,94,000. So that is 9,96,315. That's going to be marked as B. And the third step and the final one is NPV. That's going to be PVCI minus the PVCO. That's B minus A. We say then 8,25,000. So we get an NPV of 171,315. Now, so I have calculated the NPV of the respective projects M and N. Now, if I tell you select the project, goes without saying it has to be project N, because project N is going to maximize our NPV. So answer to the first point is, I'm again telling you the best method of all is the NPV technique. So you will always be taking NPV. Here we are incorporating certainty equivalent by converting uncertain cash flows to certain cash flows. Now the next point is actually speaking a logical question, logical reasoning question. We don't have to do any calculations there. It's just logic that we have to apply. Now this is certainty equivalent. If RADR technique I'm going to use in this method, if I use RADR technique, which project do you think would be analyzed with a higher rate and why? So first of all, both the projects will have their own risk. If risk in a project will be more, the project's cash flows will that project's cash flows will be discounted at a high rate. Now to determine which project is having more risk, how will I come to know? Because accordingly my discounting rate is going to change. आप मुझे बताइए कौन सा प्रोजेक्ट ज्यादा रिस्की है, प्रोजेक्ट M या प्रोजेक्ट N? क्या लगता है कौन सा प्रोजेक्ट ज्यादा रिस्की है? Now people would apply common sense, and I believe you would have been even come to the correct conclusion. It is project M that is having more risk. Sir, how come project M is having more risk? See, look at their certainty equivalents. There is 90% certainty of cash flows of year 1. There is 80% certainty here. In year 2, there is 70% certainty of the cash flows, whereas here it is 80%. And there it is 50% and the 70% for third. So can I say uncertainty in these cash flows is more as certainty equivalent factor is less. So where uncertainty is more, risk is more. So in this case, if this sum was to be analyzed, appraised by using RADR technique, then believe me, I would have taken a higher discounting rate to discount the cash flows of project M, since certainty equivalent factor for each year is less as compared to certainty equivalent of project N cash flow, which means uncertainty there is more vis-a-vis here. Did you get this, friends? So solution to the second point will be what? Since certainty equivalent for each year's cash flow of project M is less as compared to that of project N, project M has a higher risk, and hence cash flows of project M will be discounted at a relatively higher discounting rate. So this was RADR technique and certainty equivalent method for you guys. So both are some or the other way minimizing the risk. One adjusts the discounting rate, the other adjusts the cash flows. Now after this we are going to discuss the next method, and that next methods are going to be risk measurement techniques of probability distribution approach and so on. So we'll understand it in a while. Okay, so now we are done with two methods. One is the risk adjusted discounting rate and certainty equivalent method. Now I'll be taking up the next method, which is the most important method, which is the probability distribution approach. So let us understand this probability distribution approach. Now let us understand what is exactly this probability distribution approach going to do. Probability distribution approach will measure risk of the project's NPV. Listen to the words carefully. This approach will measure risk of the project's NPV. Now what does this mean, sir? Suppose, let's presume this way. When I calculated the NPV, I got an NPV of positive 10,000. Are you 100% sure that you will get 10,000 only? No. Is there a possibility that this can deviate? Yes, of course. So this is going to deviate by how much? This can deviate by how much? That is what is risk. So I'll come to know that if I have a NPV of positive 10,000, what is the possibility that this might move up or down in whichever direction, but by how much? So how will I measure this? कि suppose मुझे लगता है कि ये on an average plus 5,000 या minus 5,000 चल सकता है, यानी कि it can give me an NPV which can go as high as 15,000 and which can come as low as 5,000. So how do I get this deviation? So probability distribution approach is actually going to help us to to measure risk. When I'm using the word risk, please keep it at the back of mind. What I'm telling you is nothing but deviation. The word risk is actually nothing but deviation. So this probability distribution approach will measure risk of the project's NPV. How? By calculating standard deviation of the project's NPV. Now, so what does this mean? So we will calculate standard deviation of this project's NPV, and then we will determine which project is having more risk. Jitna zyada deviation, utna zyada risk. So what we will do here is, first we will take a couple of examples so that we get well versed that how do we calculate standard deviation. So let me take a few examples. Let us presume, friends, this is my first example, and I am now making you guys understand the calculation of standard deviation. So when I'm using the word standard deviation, it is actually nothing but risk. Calculation of standard deviation first. To better understand, let us take an example. Suppose we are planning to invest our money in share of a company TCS. So let's presume we plan to invest money in TCS. Will you straight away buy the share? Of course not. You will do your own research. Now, your research indicates that in the past 5 years, now when I'm using the word in the past 5 years, what does it mean? Actuals or estimates? Actuals. In the past 5 years, let's presume the returns given by TCS in percentage is as follows. So it has given me a return of 20%. It has given me a return of 30%. The returns went low to 5%, zoomed up to 40%, and let's presume the returns here were 25%. So these are all the returns that we have actually earned from this share of TCS. So if I tell you, calculate the average returns which we have earned from TCS, average returns. So how will I calculate average? This becomes variable X. And if I want to calculate the average, that's going to be X bar, which is going to be nothing but sum of all the variables by the number of variables. So I'll take the sum of all these things. So this is 30, 60, 100, 120. So we say 120 by 5. So that's going to give me 24%. So what does it mean? How would you interpret this 24% for me? 24% is nothing but the average returns given by whom? Given by TCS over the past 5 years. Is this actual or is it an estimate? Actuals. Why it is actuals? Because the subject matter of study, which is returns in percentage, itself is actual. So can I say your outcome will also be actual? So since the subject matter of study is actuals, the average that I have calculated is also an actual. Next question. Is it possible that this has deviated? If I ask you the question, if you look at the past track record of TCS, the average returns which we have earned is 24%. Has it shown a tendency to deviate? Or have you received the same returns every year? See, if I write 24, 24, 24, 24, 24, my average will also be 24. But if I write 24, 24, 24, 24, 24, can I say that means there is no deviation in the returns? Every year you are getting same returns. That would indicate that there is no risk, that exhibits that there is no risk. But if I look at the past track record of TCS, can I say the returns are fluctuating? Now, if returns are fluctuating, it means, can I say, there exists risk in TCS. So how do I measure that risk? That risk measurement will be done by using the statistical tools of standard deviation. But let's understand various other techniques as well. One way to measure risk is simply to compute range. One way to measure risk is simply calculate range. How do you calculate range, friends? Highest value minus lowest value will give you the range. If you notice, this share of TCS has a highest value of 40. It is given the least return of 5. Can I say it has a range of 35? It has a range of 35. Now you think and tell me, high range would indicate high risk or low range would indicate high risk? Socho. High range would indicate high risk or low range would indicate high. Obviously high range will indicate high risk. Why so? But when range is more, it indicates that there's a lot of deviation in the returns, and the more the deviation, more is the risk. So high range indicates high risk, and I can say range as a measure of risk. Range is one measure of risk, but this measure of risk, which is range, has a problem. It has limitation. What do you think is the problem of this method of range? The problem associated with range is what you know. It only considers extreme values, the highest and the lowest. Can I say in between values were simply ignored in range? Are you getting it what I'm telling you? A range is a measure of risk, as it shows that high range indicates high risk. The problem with range is ये मैंने 35 कैसे calculate किया? 5 और 40 का difference ले लिया. But when calculating this range, can I say other values are being simply ignored? But I have to take into account the other values as well. So how will I decide which and how do we calculate the other values to determine the risk? How would you calculate that and how would you take it into consideration? Very simple way. What I can now do is I can take the average returns from the TCS. Can I say the average I have calculated, it is 24%. Don't you think that 24% is like a midpoint, a center point, an average, यहाँ पे center point? So what I'll now do is I'll check from this average. This average is representing these 5 things only. This average is actually representing these 5 things only. So what I'll do is from the center point, I will check how much each year's returns have deviated. Are you getting it? Range का problem क्या था? Only extreme values. So to take into consideration all the other values, I will take first the representative of all these returns. The representative is 24%, and from this representative, from this average, I will calculate the deviation of each year's return. It means what I'll now do is deviation bola, deviation from center point, that is average. Deviation bola to minus sign. Deviation of each variable from its mean is what I will take now. So I will take x minus the x bar. So this is x bar. So my deviation here is minus 4. 30 minus 24, I get 6. 5 minus 24, this is minus 19. This is 16, and that is going to be positive 1. What are we doing here, friends? We are actually measuring risk. We want to measure risk. Can risk go negative? Can risk go negative? Of course not. Either you will have zero risk, no risk, or you will have some risk. There cannot be negative risk. But if you notice, friends, there is some problem here. We are getting some values negative. We are getting some values here as negative. So how can I eliminate that negative aspects or negative factors? Simple. What I'll now do is I'll simply square these deviations. I'll simply square the deviation. So now I know that this is going to be 16, this is going to be 36. So we can now say here it's going to be 361, this is going to be 256, and this is going to be 1. So one way to measure risk was to calculate range, but since range was having problems, I wanted to take into consideration each and every variable. So what did I do? I took the representative 24% is average. ये इन सब का एक representative है. So from the average, I found the deviation of each of the variables. But in doing this calculation, then I realized that there are certain factors that are coming negative, and as risk cannot be negative, what will I do? I'll take square of all these values. So one more way to calculate and measure risk is what? Is to calculate something called as average deviation. This is average return. We can even calculate something called as average deviation. And that average deviation is more popularly called as variance. So I can now calculate variance of this returns. The variance of X. Now how do you calculate average? आपने ये average कैसे लिया? आपने simply you have taken sum of the products. एवरेज होता है सम बाय एन करोगे ना तो एवरेज आ जाएगा. तो अभी मुझे एवरेज किसका लेना है? इन सब डेविएशंस का एवरेज लेना है. So I'll take sum of the square of the deviation of the variable from its mean. So now let's see, 16 plus 36 plus 361 plus 256 plus 1. So that's giving me 670. So here the total is 670. This is my total deviation. Now I want to calculate the average of this deviation. So I can say that's going to be 670 by n. What is n? 5. So we will divide this with 5 and we now have 134. So if you want, you can call this 134 as 134% square. Why? Because we have taken square here. So these are returns in percentage. तब तक तो ये deviation percentage में था, but आपने square किया तो आपको जो ये average value आया है वो percent square हो जाएगा. But can I say, friends, in doing this calculation of variance, somewhere we have taken artificial squaring. Somewhere हमने artificial squaring किया है. तो don't you think now we become duty bound? We become duty bound to eliminate that effect of square. Somewhere, can I say, ये negative factors हटाने के लिए मैंने squaring किया है. So now we are duty bound to eliminate that effect of square. And how will you eliminate that? So we need to now actually standardize our deviation. And how will you do the standardization? You will take root of this deviation. So whatever variance you have calculated, taking root of that variance is going to give me the standard deviation. So I would say 134% square का अगर आप deviation लोगे, that is root लोगे, तो you are getting 11.58%. Now remember, friends, this what we have done is nothing but standard deviation, also denoted by SD. Sir, ऐसे तो समझ गया, but ये square root क्यों लिया ना, वो नहीं समझा. Somewhere we have taken artificial square. So to standardize that deviation, we now have to take root of that. And remember, friends, the standard deviation will have the same unit. It will have the same unit as whatever is the subject matter of study. So my subject matter of study is returns in percentage. So my standard deviation will also be in percent. If this was runs scored by cricketer, then my standard deviation would have also been in runs. So if these were marks of students, then the standard deviation would have also been in marks. So you have to remember, standard deviation carries the same measure of unit, which is the subject matter of study. Did you understand this? Pakka? Acha, but sir, what is this indicating? वो नहीं समझा. What does it indicate? What is the average returns given by TCS? 24%. Average returns given by TCS is 24%, which indicates that it has deviated on an average in the past by 11.58%. Sometimes on an average it has given me returns higher than 24% by 11.5%. Sometimes it has given me returns less by 11.58%, but everything here, friends, is on an average. So on an average, this one has given me a returns higher by 11.58%, sometimes less, but everything on an average. Did you understand this, friends? पक्का? तो अब आप मुझे बताइए इसका फायदा क्या, ये कैलकुलेट करके फायदा क्या, and how can I make use of these things in real life scenarios? See, friends, what you can always do is आप आपके thumb rules बना सकते हो. Let us presume हमने एक thumb rule बनाया है कि हम लोग वही शेयर बाय करेंगे जिसने in the past 5 years on an average 20% and above returns दिए हैं and उसका standard deviation 10% से कम हो. Understand? So I'm making a criteria. One is the past track record should be such that it has given me on an average 20% and more returns and has a standard deviation of 10% and less. That is उसका fluctuations मुझे ज़्यादा नहीं चाहिए. उसका fluctuation max 10% on an average होना चाहिए. So if I notice मुझे पता चला कि TCS ने past में 24% average returns दिए हैं. So can I say मेरा first criteria filter test satisfied? Yes, it is given a return of 24%. So we should go for this project on the basis of returns. But I have decided that I will not select the stocks which have a higher deviation and the deviation should be at least 10% or less. अब इसका deviation कितना है? 11.58%. तो can I say ये मेरा risk criteria filter test satisfy नहीं कर रहा है. And since it is not satisfying my filter test of risk criteria, I would reject my investment. Now try to gauge this example from capital budgeting point of view. Till now we were just taking decisions on the basis of NPV reward, completely ignoring the risk. तो मुझे NPV पॉजिटिव है 10,000, तो मैं वही प्रोजेक्ट सेलेक्ट करता हूं जो मुझे NPV 8,000 and above देंगे. क्या ये प्रोजेक्ट दे रहा है? Yes. But the standard deviation of that NPV should be say 5,000 and less. Suppose जब मैंने standard deviation calculate किया तो मुझे पता चला इसका standard deviation आया 7,500. तो कहने से risk appetite satisfy नहीं कर रहा है. So on the basis of risk I would have rejected the project. Are you really following what I'm telling you, friends? पक्का? So here we can actually make use of this standard deviation for our decision makings. Okay, now this was one example where I have calculated the standard deviation, that is the risk of the project, on the basis of past data. On the basis of past data. Now let me take up one more small example. I'm not doing the calculation again, but at least now it would have given you a fair idea what needs to be done. Suppose now we have one more stock, say Asian Paints, or rather for comparison purpose मैं Infosys ले लेता हूँ, वो better रहेगा. Suppose we have Infosys. Now I took same 5 years data, and when I calculated the returns of Infosys, let us presume I got the answer here as 32%. So Y bar is 32%, यानी average return इस stock ने जो मुझे दिया है वो 32% का है, and its standard deviation is, let's presume, 17.5%. So if I now tell you this is average of returns from Infosys, this is the standard deviation, मतलब ऐसे बोल सकते हो कि on an average in the past Infosys ने इतने returns दिए हैं which on an average has deviated by this much amount. So if I ask you which share between the two is having more risk, if I ask you which share between the two is having more risk, you people would have simply jumped to a conclusion. Sir, Infosys में ज्यादा रिस्क है. मैं बोल रहा हूं क्यों? सर क्योंकि इसका स्टैंडर्ड डिविएशन ज्यादा है as compared to TCS. And our answer would be straight away wrong. Why, sir? Because friends, standard deviation is an absolute measure of risk. Standard deviation is an absolute measure of risk and hence not comparable. क्योंकि थोड़ा सा कॉमन सेंस भी आप अप्लाई करते हैं ना तो पता चलता, इतना रिस्क है बट रिटर्न्स भी तो ज्यादा है, रिस्क कम है तो रिटर्न्स भी कम है. So you're taking more risk, you're getting more returns. You're taking less risk, you're getting less returns. So which one is having more risk? You cannot directly compare their standard deviation as it is an absolute measure of risk. So we need a relative measure of risk. अब ये relative measure of risk क्या होगा? The relative measure of risk is that coefficient of variation. The relative measure of risk is nothing but the coefficient of variation. And how do we calculate this CV? Tell me friends, how is CV calculated? Formula बोलो यार. The formula is standard deviation by average. So this is the formula for calculating the CV, standard deviation upon the average. Now if I do this calculation for TCS and for Infosys, you would realize कि यहाँ पे जो standard deviation आया TCS का वो था 11.58% upon 24 और यहाँ पर आया 17.5% over 32. So when I calculate that, what does it indicate? 11.58 divided by 24, that's giving me 0.4825 is to 1. And here this is 17.5 divided by 32, that's coming to 0.5469 is to 1. Could you please do the interpretation for me, please? How do you think we should interpret this 0.4825 and 0.5469 is to 1? ये रेशियो हो गया, ये हो गया डिनोमिनेटर, ये हो गया न्यूमरेटर, which tells you what you know. For getting, or if you have earned 1% returns from TCS, the returns have deviated by 0.4825%. Same 1% returns from Infosys, the deviation is 0.5469. So for average return of 1%, the returns have deviated by this much percent, and for an average return of 1% here, the returns have deviated by 0.5469%. So now if I ask you which one between the two is having more risk, now both are comparable and deviation here is more, so you would say yes sir, this one is having more risk. So understand, I cannot directly compare the standard deviation. So you can't directly compare the standard deviation as it is an absolute measure of risk. So the relative measure is coefficient of variation. So we need CV and we will calculate and compare the CV. Wherever CV is more, that project will be having more risk. That investment is having more risk. Samjha? Pakka? So here what we did, we have taken decisions purely and the calculations on the basis of past data. But sir, हम तो कैपिटल बजटिंग कर रहे हैं. कैपिटल बजटिंग चैप्टर में जो सारा डेटा होता है सर वो तो फ्यूचरिस्टिक डेटा होता है. तो हमको एसडी एंड जो एवरेज कंप्यूट करना होगा वो तो फ्यूचरिस्टिक डेटा के बेसिस पे करना होगा. So how would you solve that? For that, I'll be taking up the next example again, where we will calculate SD on the basis not of past data, but on the basis of futuristic data. Once that is done, trust me, my part of the job for probability distribution approach gets over. Then it will be solving these sums. Is it okay? Fine. So we'll be discussing the concept of standard deviation on the basis of futuristic data. Now let's take up the next example, and this time the example here is for calculating SD. So I think this would be my third example. So it is going to be calculation of standard deviation. That is actually nothing but risk. Now when I say risk, it is actually deviation. Calculation of standard deviation, but on the basis of futuristic data. Now let's understand this. Please pay attention, especially for this example, because after this example is done, then I'm going to take up sums which are going to be based on probability distribution approach. Now let's understand it this way. Now we all know that in around 2 months time the elections are going to be due, and at the same time even we are planning to start a new project. So, elections are due, and at the same time, we are planning to set up a new project. We are planning to start a new project. Cash flows of our project are dependent to an extent on the type of government that is going to be formed. First of all, tell me, is it possible that the cash flows of your project will be dependent on the type of government that will be formed? Of course, yes. Of course, yes. Suppose three outcomes are possible. So we have three possible outcome: type of government. Either you will be having a government with full majority, or there could be a coalition government, that is that Gathbandhan, and then the last one, no government at all, so that's going to be a hung assembly. Three possible outcomes are there. Now at the same time, I am also expecting that I'll also be starting and launching a new project, and the cash flows of my project are to an extent dependent upon the type of government that will be formed. Now I think that if a government with full majority will be formed, I will expect that there will be cash flows of say rupees 4,000. I'm purposely keeping small values because our objective is to understand the concept. If there will be a coalition government, then I feel that there will be a lot of hiccups in getting approvals from the government and all that stuff. That will delay the start of the project, and because of that my cash inflows will be less. So let's presume I expect 3,000 rupees of cash inflow from this project. If no government will be formed, then I think, now if no government will be formed, that doesn't mean that there will be no cash flows. There will be cash flows, and I expect that the cash flows will be of 2,000 rupees. So if I now tell you, calculate the average cash inflows which you expect. So how would you calculate the average cash inflow? As per this information, if I tell you, calculate the average cash inflows that you expect, what will you do? Can I say you will add up these values? So we can say this is going to be 9,000. This becomes your variable X, and then I'll say average will be sum of all the variables by number of variables. That's going to be 3,000 rupees. So this is the average cash inflow which you expect. Now, this cash inflow that I have calculated is which cash inflow? This average cash inflow that I've calculated is which average? Can I say this is actually nothing but simple average? This cash inflow that I've calculated is nothing but a simple average cash inflow. Question is, simple average also has a limitation. What is the limitation of simple average? In simple average calculation, there is one inbuilt limitation. What is the problem of simple average? It gives equal importance to all variables. Simple average gives equal importance to all variables. That is, as per simple average, there is 1/3 chance that you will be having full majority. There is 1/3 chance that there is going to be a coalition government, and 1/3 chance for no government. That is a problem. It's giving equal importance to all variables. And hence, between simple and weighted average, we have to always give preference to weighted average. Now for weighted average, I need to find the weights. So from where will I get the weights? So what will I do? I checked few news channels, and they have given their opinion polls, that exit polls and opinion polls they give. So as per the news channels, they are of the view that there is 60% chance, 60%, or we can even say 0.6. So there is 0.6 or 60% chance of occurrence of this event. That means, as per the news channels, there is 60% chance that a government with full majority will be formed. There is 30% chance that a government with coalition would be formed, and there is 10% chance that there's going to be a hung assembly. So these are all the probabilities that we have taken from the news channels. So now this becomes variable X, this becomes the probability, the frequency, the chance of occurrence. So if this time I tell you calculate the average cash flows which you now expect, tell me charters, how would you calculate the average cash flows from this project? Very simple. You will take sum of fx. That means, are these, first of all, tell me, actual cash flows or estimated cash flow? These are estimated cash flows. So what I'll do, I'll take estimated cash inflows. I will now multiply it with the probabilities, and then I'll get the average cash inflows. So this is going to be 2,400. This is going to be 900. And this is going to be 200. So we say that's going to be 2,400, 3,300, 3,500. So this 3,500 is also going to be an average cash flow. This is also an average. This is also an average. This is simple average. This is weighted average. Between the two, I should give preference to what? Obviously to weighted average, because there is a problem of simple average. So I'll not give importance to simple average, but I'll give importance to weighted average. So if probabilities are given, then how is average calculated, friends? If probabilities, listen to the wordings carefully please. If probabilities are given and if I have to calculate the average, what will I do? I will multiply that estimated value with the probability, and then I'll take sum total of this. If I have to calculate average using probabilities, you will take the estimated values, multiplied with the respective probabilities, then take sum of it. That will give you the average. This average which I have calculated is the weighted average, and in FM the weighted average word is to be used as the word expected. So this is actually nothing but expected cash inflows. Expected word is nothing but average. If I want, I can even say this is weighted average cash inflow. So friends, what is the job or role of the probability? Probability का काम क्या है? Probabilities help us to convert several estimated outcomes to one representative outcome. I will again repeat, probabilities will help us to convert these estimated outcomes to one representative outcome. This representative outcome will be termed as expected outcome, expected cash inflow. Are you getting this? Okay. तो अब तक तो मैंने सिर्फ क्या ढूंढा है? एवरेज कैश फ्लोज. अब मेरा नेक्स्ट क्वेश्चन, आर यू 100% श्योर कि 3,500 मिलेगा ही? नो. इज इट अ पॉसिबिलिटी दैट दिस विल डिविएट? इज इट पॉसिबल दैट दिस विल डिविएट? यस. हाउ कम? इफ यू नोटिस, this is representative of all these things, correct? This 3,500 is representing all these things. यहाँ पे fluctuation है, तो यहाँ पे भी fluctuation होगा ही ना. So definitely there will be a possibility of deviation from this average. So I want to know that this cash flow, on the basis of these estimated outcomes, I want to know that this can deviate by how much? What is the amount with which this amount can deviate? So how will I do that? First, I want to measure that risk. I want to calculate deviation. It means I want to measure risk. One way to measure risk is to simply calculate range. I just told you, how do we calculate range? Highest value minus lowest value is range. So highest is 4,000, lowest is 2,000. So range is 2,000. But in computing this range, what's the problem? We are not considering all values. We are considering only the extreme values. In between values are simply ignored. So if I want to take into consideration those in between values as well, तो मैं क्या करूँगा? From my representative, I will check by how much these values deviate. So what will I do now? I'll take x minus the x bar from my representative. That is, from this I will see how much is the deviation in the variable. So this is x minus x bar, that's going to be 500. Again this is going to be 500, but that time here now it is negative, and here the deviation is 1500 negative. Samjha? So I have taken the deviation. But now if you notice, my objective is to measure risk. I want to calculate risk. Since risk cannot be negative, मुझे कुछ ना कुछ values negative आई है friends. तो मुझे वो नेगेटिव फैक्टर्स एलिमिनेट करने पड़ेंगे. तो व्हाट विल आई डू? आई विल टेक स्क्वायर ऑफ दीज डेविएशंस. तो नाउ लेट्स डू द स्क्वायरिंग हियर. 500 into इक्वल टू करोगे तो दिस विल बी 25,000, नहीं 2,50,000. So again here also it will be 2,50,000. And this one is 22,50,000. ठीक है. Now what exactly is वेरिएंस? सबसे पहले तो मुझे बताओ, जो मैंने पास्ट डेटा के बेसिस पे वेरिएंस इज नथिंग बट एवरेज डेविएशन. सिंपल फिट कर लो, एवरेज डेविएशन इज नथिंग बट वेरिएंस. वहां पे हमने क्या किया था? सम ऑफ द डेविएशन, जो टोटल डेविएशन मिला था, डिवाइड बाय एन किया था. तो वहां पे हम लोगों ने एवरेज कैसे लिया था? इफ यू रिमेंबर टीसीएस का एवरेज वी टुक इट लाइक दिस, सम बाय एन. अच्छा, वेरिएंस कैसे कैलकुलेट किया था? वेरिएंस which is also nothing but square of standard, वो कैसे कैलकुलेट किया था? sum of x minus x bar the whole square by n. अच्छा, यहां पर मैंने एवरेज कैसे कैलकुलेट किया है? I have multiplied these estimated outcomes with the probabilities and I have calculated the average outcome. तो अगर मुझे ये सम टोटल ले लिया और मैंने एवरेज फाइंड आउट कर लिया, so if I tell you calculate the average variance, how will I calculate the average variance? So what will I now do? I'll multiply this variance with the probability, that is x minus x bar the whole square, and then I'll take sum of it. तो एक बार मैंने उसका टोटल ले लिया तो जो मुझे मिलेगा वो एवरेज वेरिएंस ही होगा ना यार. I'll take it this way. Are you 100% sure ये deviation होगा? नहीं. ये deviation होने का चांस कितना है? 0.6. Are you 100% sure ये deviation होगा? नहीं. It's a possibility of 0.3 and this is having a possibility of 0.1. So I need to take out कि on an average अब ये कितने से deviate होगा. तो when we use probabilities friends, it is like this. अगर मैं आपको समझाऊं तो ये average कैसे लेता है यहाँ पे? Sum of all variables divided by n. तो probabilities नहीं होती तो मैं इसका total लेके divide by n करता. बट मैंने यहाँ पे एवरेज कैसे कैलकुलेट किया? वी टुक प्रोडक्ट ऑफ द प्रोबेबिलिटीज ऑफ प्रोडक्ट ऑफ द प्रोबेबिलिटीज एंड कैश इनफ्लोज एंड देन वी टुक अ टोटल. तो मुझे इसको भी प्रोबेबिलिटी से मल्टीप्लाई करना पड़ेगा ऑफ 0.6, 0.3, 0.1 एंड देन आई विल टेक सम ऑफ द प्रोडक्ट ऑफ द प्रोबेबिलिटी एंड द वेरिएंस एंड देन व्हेन आई सम इट अप, ये जो मुझे मिलेगा ये होगा वेरिएंस. समझा? सो नाउ लेट्स डू दैट. सो इट इज 2.5 lakh into 0.6, so that's giving me 1,50,000. This is giving me I think 75,000 if I'm not mistaken, and this is 22,50,000, so 2,25,000. So now I'll add it up. So this is going to be 1,50,000 plus 75,000 plus 2,25,000. That's giving me 4,50,000. तो ये 4,50,000 क्या हो गया? ये हो गया वेरिएंस. बट कैन आई से फ्रेंड्स, समवेयर हमने फिर से आर्टिफिशियल स्क्वायरिंग किया है, तो वो एलिमिनेट कैसे करोगे वो स्क्वायरिंग का इफेक्ट? सिंपल, you need to standardize that deviation. And how will you standardize that deviation? By taking root of this variance. So that root of this variance is going to be standard deviation. So this is going to be 4,50,000 का square root लेना है. So when I do that, I am getting 671 rupees. Why am I writing rupees? Because my subject matter of study is rupees. So my outcome has to be in rupees. Sir, can you please do this interpretation of 677? Of course. On an average कितना कैश इनफ्लो मिलेगा आपको? टेल मी. आपको क्या लगता है ऑन एन एवरेज फ्रॉम दिस प्रोजेक्ट कितना कैश इनफ्लो मिलेगा? 3,500. Is it possible that it is going to deviate? Yes sir, it is possible. If it is possible, then it is likely to deviate by how much? It is likely to deviate by 671 rupees plus minus. मतलब I think that the average cash inflow from the project is 3,500, which on an average is likely to deviate plus minus 671 rupees. अब suppose मेरा फिर से थंब रूल है कि भाई मैं वही प्रोजेक्ट सिलेक्ट करता हूं जो मुझे ऑन एन एवरेज कैश इनफ्लो 3,000 से ज्यादा देगा प्लस उसका डिविएशन 500 से कम हो. तो कैन आई से ऑन द बेसिस ऑफ रिवॉर्ड ये प्रोजेक्ट सिलेक्ट होगा, क्योंकि ये प्रोजेक्ट मुझे 3,000 के ऊपर कैश इनफ्लो दे रहा है. because it is giving me 3,500. But on the basis of risk, since the deviation is above my risk appetite of 500, I would reject the project on the basis of risk. That is on the basis of deviation. So it tells you your cash flows will fluctuate by how much. And here I would say it will fluctuate by 671 rupees. ठीक है, पक्का. So you have to understand, how did I calculate average? What is the job of the probability? It will convert several estimated outcomes to a representative outcome. Using that, I have calculated the standard deviation. I will repeat again. Whenever probabilities are given, how is average calculated? Estimated outcome into the probability, sum of that, that is the average outcome. So this is average deviation. This is average. तो उस average का on an average इतने से deviate होगा. क्योंकि squaring किया है purposely artificial, we took the root of that. That's going to give me the standard deviation. So this was calculation of standard deviation risk on the basis of futuristic data. This is what we have to do in this chapter now. There are sums which we will be taking up, and we will calculate the NPV of the project, where we will be making use of probability distribution approach. Is it okay? Fine. So this was the entire discussion. Believe me friends, now once this part of the discussion is done, it becomes way too easy for us to tackle all the sums on probability distribution approach. So let us take up the sums on probability distribution approach. Okay, so now let's take up question number 4. Probabilities for net cash flows for 3 years for a project are as follows. So we have year 1, year 2 and year 3. The cash flows are given and the probabilities are given. Tell me friends, ये जो cash flows उन्होंने हमें दिए हैं, these are which cash flows? Estimated cash flows or expected cash flows? Estimated. जब तक probabilities hit नहीं होती, तब तक जो cash flows हैं वो estimated cash flows होंगे. We have it for year 1, 2 and 3. The question says calculate the expected net cash flows. Also calculate the present value of expected cash flows using 10% discounting rate. Initial investment is 10,000. In short, they're telling you to calculate the present value of the expected cash flows. So जो भी cash flows है उनको present value में convert करो, and then I would say in fact what they're telling you is to calculate the NPV of this proposal. So now let's understand how would you calculate this, friends. I'll solve this for you so you can have a good idea and fair idea, and in the exam if it comes you should be able to tackle this sum. So I would say calculation again of what? Calculation of NPV. Calculation of NPV. So now how will you calculate the NPV? Thought process always remains the same. We will go for this project. Now if I go for this project, then tell me right now from our pocket kitna jayega. Right now, what is the cost of the project? The cost of the project clearly given is rupees 10,000. So we have 10,000 as the project cost. Now, are you mad to invest this money in this project? Of course not. So then why are you investing this money? We are investing it with an objective to generate benefits. Are benefits, that is nothing but cash inflows given? Yes, they are given, but they are given, estimated outcomes for year wise. Now friends, tell me, how do you calculate the NPV now here? Tell me. So now you can't directly write PVCI. Your first objective now will be to calculate the expected cash inflows. So we have calculation of expected cash inflows year wise. So now I'll think this way, year 1 now. So what is the estimated cash inflow given? Estimated. So I have 2,000, 4,000, 6,000 and 8,000. Are you 100% sure that these cash flows will occur? No. We have the probability, that is a chance of occurrence of 0.1, 0.2, 0.3 and 0.4. Now when I multiply the estimated cash inflows with the probabilities, then what will I get? Estimated cash inflow to be multiplied with probabilities, and then I'll take sum total of this. That will give me expected cash inflow, friends. This is expected cash inflow. Of which year? Of year 1. So now I would say this becomes 200, this is 800, this is 1800, and this is going to be 3200. So when I sum it up, so I can say this is going to be 1000, 3000, 6200, correct? Or 6000. So this is going to be 5000 and this is going to be 6000. Yes. So the expected cash inflow for year 1 is going to be 6000. Same exercise I will repeat for year 2 and year 3, and then these representative, यानी ये 6000 क्या होगा? मुझे लगता है on an average first year में इतना cash inflow मिलेगा. This is what I expect in year 1. Now same calculation I'll do for year 2 and year 3. So let's think about year 2, friends. Now in year 2, what is the estimated cash inflow? So we have estimated cash inflow of rupees 2000, 4000, 6000 and 8000, and we now have the probabilities. So this time the probability here is 0.2, 0.3, 0.4 and 0.1. So estimated cash inflows into the probabilities will give you the expected cash. So this is going to be 400, this is going to be 1200, this is going to be 2400, and that's going to be 800. So this is 2000, then this is 4400, this is 4800. So this becomes 4800 as expected cash inflow of year 2. Same calculation I am going to repeat for year 3 as well. So we will repeat this for year 3 as well. So we have year 3. Again, what I'll do is I'll take estimated cash inflows and then the probabilities. Estimated cash inflows into the probability will give you the expected cash flow. Cash flows are again 2000, 4000, 6000 and 8000. So this is 2000, 4000, 6000 and 8000. So we can now again multiply these with the respective probabilities. So that's going to be 0.3, 0.4, 0.2 and 0.1. So when you multiply the estimated probabilities with the estimated cash flows with the probabilities, then you will be calculating this as 600, 1600, 1200 and 800. So this becomes 2000, 3600, 4200. So here this is estimated cash inflows. When I multiply it with the probabilities, that's going to give me the expected cash inflows. तो ये हो गया मेरा expected cash inflow of year 1, year 2 and year 3. मुझे कैलकुलेट करना है NPV. So this is my average cash inflow of year 1. This is average cash inflow of year 2, average cash inflow of year 3. These are representing each year's cash flow. These representative cash flows are to be then discounted and then present value of cash inflows will be calculated. So that is going to be my next step. That's going to be third step. That is going to be PVCI. Up year wise, year 1, year 2, year 3, we have expected value cash flows, that is EVCF, which is nothing but representative of year 1 as 6000. The representative of year 2 is 4800. The representative here is 4200. यानी हर साल का probabilities use करके average cash flows ढूंढा हमने. अब वही एवरेज कैश फ्लोज अपने रिप्रेजेंटेटिव हो जा रहे हैं. जैसे एक क्लास को कैसे एक मॉनिटर रिप्रेजेंट करता है. सो दीज आर रिप्रेजेंटिंग ईच ईयर्स कैश फ्लोज. दिस इज नाउ टू बी डिस्काउंटेड. कुड यू प्लीज चेक, इज द डिस्काउंटिंग रेट गिवन? यस, इट्स 10%. सो वील डिस्काउंट इट एट 10% and I will calculate the present value. So this is 0.9091, 0.8264, 0.7513. So when I now calculate the present values, so that's going to be 6000 into 0.9091, that is 5455 into 0.8264, so that is going to be 3967. That's going to be 3155, and when I take the grand total, that's coming to 12,577. This can be marked as B. Did you get this? अब मेरा next question. Can I say ये सब cash flows average हैं? अच्छा, अगर आपने ये average cash flows लिया है, तो ये जो आपको PVCI मिला है, can I say वो भी एक average PVCI होगा? So in FM, the word average will be substituted with the word expected. So this I will now substitute it with the word expected. So we can say this is expected PVCI. That is on an average इतना PVCI मिलेगा. Now PVCI minus that PVCI. अभी आप मुझे बताइए कोई भी कैश फ्लो, कुछ भी कैश फ्लो, कहने से ये तो कांस्टेंट ही रहने वाला है. 10,000 तो 10,000 इनकर ही होने वाला है. So if you take expected PVCI minus the PVCO, please tell me friends, ये जो fourth step अभी मैं calculate कर रहा हूँ, इसको हम लोग क्या बोलेंगे? Expected NPV, average NPV. That's going to be PVCI, which is expected because all these representatives are expected, that is average. तो ये average PVCI है, वो तो same ही रहने वाला है. तो I would say expected PVCI minus the PVCO. What you're going to get is B minus A, that's 2577 positive. So I can now say on an average, we expect an NPV of 2577. Now they have not asked us whether we should select this project or reject the project. Since they have not asked us about selecting or rejecting the project, we won't give our valuable suggestion. Did you understand this? It was way too easy and manageable sum for the probability distribution approach. I hope everyone has followed this one. Okay? So this was one sum on probability distribution approach. I would like to take up one more sum that is there in your study material. I think it's illustration number 11. That is also a unique sum, and I would say once it had even been asked at final CA level. So I would want to discuss that sum. That is illustration number 11 of your study material. So if you have the study material, you can just use that study material, and if you don't have that, you can very well download it from the institute's site website. So you can just come to question number illustration 11 on page number 8.26. Miscellaneous illustration number 11, that is on page 8.26. I want to solve this sum in the class so that you can understand what's the unique point of this sum. So let me take up question number or illustration number 11. I'll do it for one project, then on the same lines you can do it for the other project. So let's read that illustration number 11. Let's read. Shivam Limited is considering two mutually exclusive projects, projects A and B. Now, what do you understand by the word mutually exclusive? As I told you, accepting one automatically leads to rejecting the other. Project A costs rupees 36,000 and project B is going to cost us 30,000. You have been given below the net present value probability distribution for each project. So we have project A, we have NPV estimates, we have the probabilities. Now they have given us this time NPV estimates, understand. So what we have is estimates of NPV along with the probability. So this time they have not given us cash inflows. What they have given us is NPV estimates for project A and project B. The question says calculate the expected NPV of project A and project B. Compute the risk attached to each project, that is standard deviation of each probability distribution. Compute the profitability index of each project. Which project do you recommend? State with reasons. So there are four things that we need to answer. Let us concentrate on one part at a time. The first one says calculate expected NPV. My dear friends, tell me expected NPV बोला, expected बोला तो average. टू बी प्रिसाइज यहाँ पे प्रोबेबिलिटी डिस्ट्रीब्यूशन दिया है, तो कहना से वी हैव टू कैलकुलेट द एवरेज एनपीवी, to be precise weighted average NPV. So how will I calculate? I'll be solving this part of the sum for project A on the same lines you can do it for project B. So my objective is just to make you guys understand that when the question gives you some other data, you should be able to tackle that as well. So I'll give the heading project A, and in that the first thing that I've been asked to calculate is expected NPV. That is nothing but the average NPV. Friends, tell me, how do you think should we tackle this sum now? तो sir, first cost of the project. Once you get this cost of the project, then you can take EVCF. अरे but वो EVCF के लिए year wise cash inflows का data चाहिए ना यार. So that information, year wise cash flows, is not given. So how will you calculate? See, in my last sum, what I calculated was expected NPV only. What I had was expected NPV only, but that was solved in a different way. Here in the question, information given itself is in a different manner. So how do you think we should tackle this sum now? It's very simple, friends. What I'll now do is I'll simply take the estimated NPV. Now what are the estimated NPVs? 15,000, 12,000, then I have 6,000 and 3,000. Already estimates of NPV is given. Estimated NPV now will be multiplied with the probability. So what's the probability? Probability here is 0.2, 0.3, 0.3, 0.2. Estimated NPV when is multiplied with the probability, then can I say what we'll get is the expected NPV. That's it. तो ये हो गया मेरा variable x, ये हो गया frequency, sum of fx, that is estimated NPV into the probability would give me the expected NPV. So let's do that calculation, friends. So that's going to be 15,000 into 0.2. That's going to give me 3,000 here, 3,600, 1,800, and there's going to be 600. So I'll sum it up now. So 3,000 plus 3,600 plus 1,800 plus 600, that's giving me 900. Oh, sorry, 9,000. अब ये जो 9,000 है, इसको हम लोग क्या बोलेंगे? Expected NPV. But in simple words, average NPV. Expected NPV is nothing but that average NPV. Answer to the first point is done. Then the second one says calculate risk attached to each project, that is standard deviation of each probability distribution. Honestly tell me, ये क्या indicate कर रहा है? ये indicate ये कर रहा है कि मुझे लगता है on an average इतना NPV मिलेगा. Next question, is it possible कि ये deviate होगा? Of course deviate होगा, क्योंकि estimates देखो ना, they are showing a tendency to deviate, तो ये एवरेज भी डिविएट हो सकता है. अब मुझे ये फाइंड आउट करना है कि ये कितने से डिविएट हो सकता है. व्हाट इज द अमाउंट विथ विच इट कैन डिविएट. In short, what I need to calculate is the standard deviation of the project's NPV. So B point now is to calculate standard deviation of this NPV. How will you calculate this, friends? If I make you guys remember the same way, one way to measure risk is to simply calculate range. Range is highest value minus lowest value. So range becomes 9,000. It has its own problems. It has its own limitations. So what will you do? You can take the representative, and from this representative, that is the midpoint, that is the average, check by how much each unit or each variable will deviate. In short, what I can now do is I can take deviation of the variable from its mean. So this minus this is 6,000. This is 3,000. This is negative 3,000. And then we have negative 6,000. Now our objective, friends, as we all know, is to measure risk which can't be negative. But यहाँ पे negative आ रहा है, तो मैं वो negative factors कैसे eliminate करूँगा? So I'll take square of this. So that's going to be 36 000 000 9 000 000 Let me check whether the calculations done are correct or not. Yes, 90 lakh, and that's going to be 3 crore 60 lakhs. Yes, so into 2 plus 3 crore 60 lakhs. So 36 into 2 plus. So that is coming to, we don't need to take the total any which ways, by the way. So if it was probabilities were not given, then what I would have done, I would have taken sum of these deviation by the number of deviation if probabilities were not given. But now since probabilities are given, we will multiply it with the probabilities so that we can calculate the average. Probability here is how much? 3 crore 60 lakh into 0.2, so that's giving me 7 lakh 20,000. So this is 72 lakh. Then this is 90 lakh into 0.3. So that is giving you 27 000 27 lakh. Then again here I think it's going to be 27 lakh. And here that's going to be 72 lakh. So we can say 1 crore 44 lakh plus 54 lakh. That's going to give you 1 crore 98 lakh. Now this 1 crore 98 lakh, friends, which I calculated will be termed as variance of X. That is, this is what I feel, that ye jo 9008 is going to deviate on an average by this much. But I want to standardize this deviation क्योंकि मैंने कहीं ना कहीं artificial square लिया है. So if I standardize this deviation, that is by taking root of the variance. So I will take a root of this variance, and that's going to be 4450. So 4450 is going to be the average deviation. And how do I interpret this, friends? 4450. Could you please tell me? Think rationally. मुझे लगता है ये प्रोजेक्ट on an average 9000 देगा, which on an average will deviate by 4450. This will give me 9000, which on an average will give me which will on an average deviate by 4450. So that is a risk. It can deviate and it can go as high as 4450 plus 9000, and it can come down by 9000 minus 4450, but everything here is on an average. So the discussion being done here is on an average. Then the third one that they say is compute the profitability index of each project. So they are now asking me, friends, to even compute the profitability index, PI. Have we learned the formula for PI? Yes or no? Yes. So what is the formula for PI? It's going to be PVCI upon PVCO. Acha, friends, could you please tell me what is the PVCO? I think PVCO is given. Project A has a cash outflow of 36,000. पूरा सम अगर आप देखोगे ना फ्रेंड्स, आपको PVCI कहीं नहीं दिया गया है. अरे बट कहने से वो मिल सकता है. How is NPV calculated? NPV, PVCI minus PVCO. तो don't you think PVCI is going to be NPV plus PVCO? अब NPV तो मैंने ढूंढ लिया है 9000, तो I can say that's going to be 36,000 plus 9000. That's going to be your NPV. So 36,000 plus 9,000 divided by 36,000. So that's giving me a PI of 1.25. So this is 1.25:1. Same calculation we can then do for project B as well, and we can then decide which project do you recommend and why. So let's check the recommendation. So here in this case, how will you take a decision? See, once you have calculated everything, that is NPV, SD and PI, we have to even answer which project would be selected. Believe me, when you will solve this part for project B, also your NPV will come 9,000. That means both are giving you same reward. Both the projects will give you same reward. So which project should we then select? Obviously where risk is less. So when rewards are same, उनका SD भी comparable हो जाएगा. So जहां पे SD कम होगा वो select करो. या फिर इफ यू से नो सर, आपने तो बोला था कि एसडी के बेसिस पे हम लोग कंपेयर नहीं कर सकते, यहां पे कर सकते हैं बिकॉज देयर रिवॉर्ड्स आर द सेम. बट if suppose you say no sir, we want to stick to one same rule, so then what you can do is you can calculate coefficient of variation, and through that coefficient of variation you can determine which project is having more risk. So that's going to be standard deviation by average. Standard deviation by average करो, and definitely यहाँ पर you will realize कि जिस project का SD ज़्यादा होगा ना उसका CV भी ज़्यादा होगा because reward is the same. So that part of the calculation I would appreciate you do it on your own for project Y, and then you can take a decision accordingly. Here NPV is going to be the same, so you can actually take a decision by comparing standard deviation. Wherever standard deviation is going to be less, you can take a call accordingly. Whereas if suppose their NPVs were also different, then we would have gone one step ahead and we would have calculated CV, coefficient of variation, and then we would have taken a call. I hope everyone has followed this sum. Pakka. Okay. Now, so as such, I have discussed this sum. That is illustration number 11. I just want to ask you one question. Please do not jump to conclusion. If we talk about project A, what do you think? What is the bestest NPV you can get? The bestest. If everything falls into places, then what according to you is the best? This is average, huh? This is average. I'm asking you, if everything goes great, then according to you, what is the bestest NPV that you can get? Can I say 15,000? What is the worst NPV you can get? The worst. बकवास में बकवास कितना NPV मिलेगा? 3,000. Best is 15,000, worst is 3,000. What is the probability of we getting this 15,000? Can I say 0.2? So the probability, the chance of we getting 15,000 is 0.2. How about this one? Worst case NPV is also 3,000, and that the probability of that is going to be 0.2. So whenever question tells us to find out best case NPV, worst case NPV, so you need to have NPV outcomes to give that answer. Are you getting it? Whenever question tells us what according to you would be the bestest NPV that you can get, what according to you would be the worst NPV that you will get, in that case, to answer this point, you need to have these NPV outcomes. Then only you can take a call. Did you get this? Fine. So keep this stuff in back of your mind, because this I will require for my next method, that's going to be the decision tree analysis. So this was all about probability distribution approach, and I would suggest that you can have a look at the solution here, though that's already there in the study material of the institute, but they have also done it almost on the same lines. So you can have a look at it, and I would say that you please do solve for project B as well, and then you can take a call accordingly which one you should go for. A project here with low risk, low deviation would be selected. Okay? Okay, so now we have one more technique, which is decision tree analysis. That is also one way to calculate your NPV. Now let's understand what exactly is this decision tree analysis. Decision tree analysis. Now what exactly does this mean? Do you agree, friends, that whenever we start or launch a project, anything can happen? If you start a new business or if you launch a new project, it can have any outcome. If you present that outcome in a picture form, that is nothing but decision tree. Means what? Decision tree is nothing but pictorial presentation of the decisions taken today and its outcome in future. If you are going to take decision today, that is if you are incurring an outflow today, anything can happen in future. If it is presented in a picture form, that is nothing but decision tree. So decision tree analysis is actually nothing but preparing, we are just nothing but describing it as a pictorial presentation of the decisions taken today and its outcomes in future. Now, I don't want to discuss much about this explanation because when we'll start solving the sums, you will realize what exactly I'm talking about in respect of decision tree analysis. So we have one sum that is based on decision tree analysis. Let's read and finish it off. That's question number 5 for us. So let's read it. I'll be solving this entire sum on the board so that you get a clear idea कि whenever in exam you get a sum on decision tree analysis, how you need to tackle it. So let's read question number 5. A firm has an investment proposal which requires an outflow of rupees 80,000. The investment proposal is expected to have 2 years economic life with no salvage value. In year 1, there is 0.4 probability that cash inflows after tax will be 50,000 and 0.6 probability that cash inflow after tax will be rupees 60,000. You please make the change. Okay, so there is some printing error there, I guess. In year 1, there is 0.4 probability that cash inflow after tax will be 50,000 and 0.6 probability that cash inflow after tax will be 60,000. The probabilities assigned to cash inflow after tax for year 2 will be as follows. So in year 1, 50,000. Now make that probability there as 0.4. Please change it and make it 0.4. In that table, against 50,000 cash flow, which has a probability of 0.6, please make it 0.4, and against 60,000 make a probability of 0.6. वो interchange हो गया है. In year 2, what does this table indicate? See friends, if in year 1 you get 50,000, then in year 2 you may get 24,000 or 32,000 or 44,000. If you get 60,000 in year 1, then you may get either 40, 50 or 60 with the respective probability of 0.4, 0.5, 0.1. Firm uses a 10% discounting rate for this type of investment. Required, construct a decision tree for the proposed investment project and calculate the expected NPV. What NPV will the project yield if worst outcome is realized? What is the probability of occurrence of this NPV? What will be the best outcome and the probability of that occurrence? Will the project be accepted? And we have note 10% discount for year 1 is 0.909 and there in the next case it is 0.826. So let's understand now how should we go ahead with this one. Okay, they're telling us to construct a decision tree. So let's do the construction of decision tree. Okay, so we have the first point, that is decision tree. Now, what is the life of this project given? If you notice, the life of the project is given to be 2 years. So we have year 0, year 1 and year 2. Now, how much cash inflow you may get in year 1? You may get either 50,000 or 60,000. Can I say provided you incur 80,000 rupees here? So if you incur 80,000, then you may get either 50,000 or 60,000. If you get 50,000, then there are three possible outcomes. Either you may get 24,000, 32,000 or 44,000. If you get 60,000, there are three outcomes, 40, 50 and 60. So can I say in year 2, there are 6 outcomes possible. So we'll have 6 possible outcomes for year 2. Now of these 6, 3 outcomes are possible provided in year 1 this outcomes occur. And this will be possible provided 60,000 occurs in year 1. अब ये भी कब होगा provided मैं आज 80,000 का खर्चा करूं. Are you getting it? So we say right now outflow, if I incur 80,000, then it is possible that I may get 50,000. It is possible that I may even get 60,000. So if I get this one 50,000, possibility is there I may even get 60,000. Now what is the probability that this event will occur? What is the chance that this event will occur? The probability of this is 0.4, and what's the probability that this event will occur? That's going to be 0.6. Now what is the possibility? If you get 50,000 in year 1, then there is a possibility that you may get either 24,000 or 32,000 or 44,000, somewhat like that. Yes. So you may either get 24,000, or you may get 32,000, or you may get 44,000. Now what is the probability of this to occur? The probability here is 0.2, 0.3, 0.5. Here if this occurs, then there are also 3 chances. Then in that case you may either get 40,000, or you may get 50,000 or 60,000. Now what is the probability here? The probability here is 0.4, 0.5, 0.1. Did you get this? So this is like decision tree. So when anyone is reading the decision tree, you would make out that if I incur 80,000, then I may get either 50,000 or 60,000. But the chance of this to occur itself is 0.4, and there's 60% chance that this will occur. If this occurs, then there are 3 possible outcomes in year 2 with a probability of 0.2, 0.3 and 0.5. But अगर ये occur हुआ तो there could be either 40, 50 or 60, provided ये occur हो with a respective probability of 0.4, 0.5 and 0.1. So this is your decision tree. One more column that I'm going to add here is going to be for that path numbers. So this is path, 6 outcomes, no? So this is going to be path 1 essay. So this is my first path. So this is my second path. The third, the fourth, the fifth and the sixth. And you have to understand one thing. Whenever we construct a decision tree, whenever we prepare a decision tree, it is always to be prepared from left to right. We always prepare from left. But whenever you have to analyze and evaluate your decision tree, analysis is always to be done from right to left. उल्टा जाना है. बनाने के टाइम पे ऐसे बनाना है. But when you interpret, it has to be interpreted in this way. So this one is decision tree. Ab, what is the required part of the sum? They say calculate the expected NPV. So they've even asked us to calculate the expected बोला तो average NPV. अभी average NPV मैं यहाँ पर कैसे ढूंढूं? So now I would say calculation of expected NPV. Now please have a look at this calculation. It's an interesting one. So your calculation of NPV first will be on the basis of path wise. So path wise हम लोग calculate करते हैं. So what is the scenario? We have path numbers. There are 6 possible NPVs that can occur. Because since there are 6 paths, there would be 6 different types of NPV outcomes. Okay. Now how do we calculate NPV friends? सबसे पहले तो मुझे बता NPV PVCI minus PVCO. अब कोई भी आउटकम करो कहने से PVCO तो कांस्टेंट है, वो तो नहीं हिलेगा, इररिस्पेक्टिव कुछ भी हो PVCO कांस्टेंट है, वो नहीं हिलेगा, that will stay as it is. So what will I now do? I'll calculate the PVCI. अच्छा, how do you calculate PVCI? In year 1 you will get this cash flow, and in year 2 this is what you're going to get. So I'll prepare the columns like this. See, first I'll begin like this. In year 1 क्या लगता है आपको कितना कैश इनफ्लो मिल सकता है? 50,000 मिल सकता है, बट कहने से ये तो फ्यूचर में हो गया, मुझे प्रेजेंट में चाहिए. So I will discount this at 10% because that is what the rate they are going to use for discounting. Correct. So, and they have given us the discounting factors as well. So that's going to be 0.909, and then I'll get the present value. So this will give me present value of cash inflow of year 1. Now I'm only looking at path 1 friends. If I look at path 1, in path 1 year 2 में 24,000 मिलेगा, provided year 1 में 50,000 मिले. तो year 1 में 50,000 मिला, मैंने उसको डिस्काउंट किया और मुझे प्रेजेंट में आ गया वैल्यू. So 50,000 into 0.909. So how much am I getting it here? 45,450. Now if you get 50,000 in year 1, then in year 2, and if you're thinking about path 1 itself, then in year 2 how much cash inflows you can get? 24,000. This is what you'll get in year 2. And what is the what's the discounting factor rate for year 2? 0.826. And then you will calculate the present value of the cash inflow. So 24,000 into 0.826, that's giving me how much? 19,824. PVCI plus PVCI. This is present value of cash inflow of year 1. This is present value of cash inflow of year 2 of path 1. यानी पहले path का बात कर रहा हूँ. So this will give me estimated PVCI. Why am I writing estimated PVCI? क्योंकि मैंने अभी तक probability को hit नहीं किया यहाँ पर. तो अगर मैं first year का calculate करूँ estimated PVCI, तो it's 45450, and that's going to give me 65,274. From this estimated PVCI, I will now deduct the PVCO. And do you agree friends? कुछ भी हो जाए, PVCO तो same ही रहेगा. So how much is the PVCO? 80,000. And when I subtract the PVCO from this PVCI, can I say I'll now get estimated NPV? So minus 80,000. So that's going to give me 14,726. This is my estimated NPV. But question is not about calculating estimated NPV, it's about expected. वो हम लोग बाद में करेंगे, but फिलहाल we can now compute estimated NPV. Same exercise I will repeat for each and every path, and then I'll multiply this estimated NPV with the probability, and estimated NPV into the probability will give me the expected NPV. वो calculation हमको करना पड़ेगा. Now what we can now do is, here we can straight away take 50,000 path 2 ka in year 1, this will be 50,000. Then for path 4, if you notice, मुझे 60,000 का cash inflow मिलेगा. So that's going to be 60,000 for year 1, 60,000 for year 1, 60,000 for year 1. Now if you get 50,000, then it is possible that you may get 32,000 here. If you get 50,000, then it is possible that you may get 44,000 here. ये भेजे में जा रहा है, मैं क्या कर रहा हूँ यहाँ पे? If you get 60,000, then you may get 40,000 here, or you may get 50,000, or you may get 60,000 again. Now, believe me, in a hurry to solve the sum, you know what blunder you will commit? In a hurry to solve the sum, you will feel that this is year 1, 2, and 3, and so on. So you will start calculating discount 0.826, 0.751, but this is not discounting factor for different years. Year is the same. So your discounting factor rate here will always be 0.909 because these are different path. एक first year में यही cash flow होने वाले. So this will be 0.909 here, 0.909 0.909 and 0.909. So be careful, friends. So now when I'll give you some shortcut also to do this calculation. Up can I say we have to multiply these values with this constant number. I want to multiply these values with this constant number. So what I'll now do is 0.909 multiplication sign, press it twice, 50,000. So that's going to give you 45450. So ये तो 45450 ही रहेगा. And then 60,000, 54540. So that's going to be 54540. Now, here I want to now, the discounting factor of year 2 is 0.826. Friends, please do not get confused. So year 2 का ही calculation कर रहे हैं हम लोग, and we are discounting these cash flows which are of year 2 only. So now what I want to calculate present value of these numbers, and I want to multiply it with these values. So 0.826 fixed है, तो multiplication sign, press it twice, 32,000. So we now get 26,432. 36,344, 33,040, 41,300, 49,560. समझा ये? पक्का? ओके. अब PVCI of year 1, PVC of year 2 ऐड करना है. So this is 71,882. This is 81,794. This is 87,580. 95,840. 1,04,100. Now these are all your PVC CI, but my objective is to get the NPV, friends. तो अब मैं क्या करूंगा, अब कुछ भी हो जाएगा ना, से PVC हो तो सेम ही रहेगा, cost of the project will remain same irrespective of the outcome. So that's going to be the same. Now so let's take it this way. So first one is negative 14,726. Second one is 8,118 negative. So this is 1,794, 7,580, 1,5,840 and 2,4,100. तो ये मेरा estimated NPV हो गया, friends. अब I want the probabilities, because these are all estimated values. Probabilities will be multiplied to the estimated value to get the expected value. Tell me, charters, how do you think we'll get the probability? Bolo. Here we will have to apply the concept of joint probability. Sir, what does it mean? आप ऐसे सोचो, हम लोग path 1 का probability assign करना है, correct? We have to assign the probability of path 1. So what is the chance, understand this, what is the chance that you will get 24,000? What is the chance that you will get 24,000? 0.2. But you will get this 24,000 provided you get 50,000 in year 1, which itself has a chance of 0.4. In year 2 you may get 24,000 and the chance of that itself is 0.2. You will get this 24,000 provided in year 1 you get 50,000. The chance of itself happening is 0.4. So what is the probability of this entire event? 0.4 into 0.2, that's going to be 0.08. Samjha? So you now keep your decision tree in front of you. So that's going to be 0.08. Similarly, for the second path, 32,000 is the cash inflow that is possible in year 2. The chance of which itself is 0.3, but that will occur provided you get 50,000 in year 1. The chance itself is of which is 0.4. So that's going to be 0.12 and this will be 0.2. Similarly, in the next case, it's going to be 0.24, 0.3 and 0.06. समझ में आ रहा है? Now, estimated NPVs will now be multiplied with the probability, और यहाँ पर जो value आएगा वो हो जाएगा expected NPV. So let's do the calculation. So 14,726 एक negative figure है into 0.08. So this is 1178.08 negative. This is 974 negative. This is 359 positive. This is 1819.2 positive. Four seven five two. 1446. This is 6224 positive figure. So on an average, I expect that the project will yield an NPV of 6224. You please do cross check the values. I think it is correct, but in case if I would have done some mistakes, so just cross check the values for this expected NPV. Okay, now if I ask you several questions that they have asked, what is construct a decision tree? My decision tree construction is done, and calculate the expected NPV. So this is my expected NPV here. So this expected NPV is also done. Second point, what they're asking now is, what NPV will the project yield if worst outcome is realized? बकवास में बकवास कितना एनपीवी मिलेगा बोलो मुझे. बकवास में बकवास कहने से बकवास में बकवास एनपीवी ये मिलेगा 14,726 negative. And what is the probability of this event to occur? There is 8% chance that you may get this NPV. So the project, if the worst outcome is realized, this is what I'll get, and the probability of this event is 0.08. What is the bestest NPV that you can get? The bestest NPV that you can get is 24,100, but the chance of this occurrence itself is 0.06. 2400 can be the bestest NPV which you can get with the probability of 0.06. Should we accept this project? Since expected NPV is positive, project should be accepted. Did you get this? So with this table, we have been able to finish off the entire required part. Decision tree, NPV found, expected. The worst outcome is this with a probability of 0.08. The best is this with a probability of this. And the expected NPV being positive, it's advisable to go ahead with this project. Okay, so this was question number 5 for you guys, and that was on the basis of decision tree analysis. I hope everyone has followed this, and I would suggest you can just take a snap of this. Now, so in this chapter till now we discussed 4 techniques. One was RADR technique, risk adjusted discounting rate, certainty equivalent, probability distribution approach, and the last which we just did was decision tree analysis. Now let us take up the next technique, which is the technique of simulation. So we now have technique of simulation, or we call it simulation analysis. Now, first of all, tell me, what do you understand by the word simulation? Have you ever heard this word simulation? Have you come across this word simulation? What is simulation? Simulation, friends, is actually nothing but imitation of reality. Imitating the reality is called simulation. Friends, हम लोगों ने इतने सारे मेथड्स फॉलो किए हैं, so many calculations we did, and then we took a decision. But the moment you launch the project, can I say anything can happen? Of course, anything can happen. So what we do here in simulation technique, using random numbers, we will calculate NPV for different trials, or I would say for n number of trials. Using random numbers, we will calculate NPV for n number of trials, and then we will take average of those NPVs, and if that average NPV is positive, then on the basis of simulation we should go for this project. I will again repeat, simulation is nothing but imitating the reality. You know, you would have come across these things whenever a new pilot joins. Do you think they will tell them le bhai plane le uda? Nahi. First they will create an environment, fake environment, and they will simulate the reality, that in case when reality में जब आप plane उड़ाओगे तो आपको ये सब cockpit होगा, ये सब machineries होंगी and all that stuff. So they imitate the reality. So same way, using random numbers, we will think this way: what if this happens? What if then if this happens? What if this happens? So for different situations, we will have different NPVs, and then we will calculate the average of all these NPVs. If that average of NPV is positive, then on the basis of simulation, we should go for this project, else we would reject the project. I'll explain you how it works, but we need random numbers for this. So what I would suggest is, you can again have your study material, because there is one sum that is based on the simulation exercise. I would discuss that sum, because you know there are many students who get confused when they read that question. I'll explain you exhaustively what it is. Come to a page number 8.18. Just come to page 8.18, friends, and that's their illustration number 9, which is actually a sum on simulation analysis. So let's read it. Annual net cash flows and life of the project with their probability distributions are as follows. So they have given us the annual cash flows, and they have given us the probability distribution for each case of life and the annual cash flows. So we have annual cash flows, we have the respective probabilities for the project life as well. Risk-free return is 10%, and the initial investment is rupees 1,30,000. So we have to decide, and then they say they have given us random numbers. Various random numbers generated are as follows. Now these are random numbers which are generated randomly, on which we don't have any control. So random numbers are given, and the question says calculate NPV for each run. So they're asking us to calculate NPV under each run. We will limit our calculation to a max of 3 to 4 runs. Same exercise you can do it for different runs as well. Now, whenever you have been given random numbers, first you need to check probability distribution is given for which variable. If you notice here in this sum, probability distribution is given for project life and the annual cash inflows. So there are two variables, one is cash inflows and the project life. For these two variables we have been given the probability distribution. So I'll need that information. So let's understand now what we will do. First step that we have to do, friends, under simulation analysis is to make a statement that will show the range of random numbers. So we have to take a statement that will show range of random numbers. So we have statement showing range of random numbers. So let us understand this statement, how it is prepared. Statement showing range of random numbers. तो सबसे पहले मेरे लिए सबसे पहला वेरिएबल कौन सा है? Annual cash inflow. So they've given me cash inflow. So I would say So we have a range of random numbers for annual cash inflow. Now, what are the different cash inflows given? They've given us cash inflow ranging from 10,000 up to 40,000 with a difference, a spread of 5,000 every year. So I would say this is 10,000, this is 15,000, 20,000, 25,000, 30,000, 35,000 and 40,000. So there is a difference of 5,000. Spread is given to be 5,000. Now उन्होंने annual cash inflows दिया है और साथ में उन्होंने probabilities भी दी है. So this is probabilities. So honestly tell me, जब तक मैं probabilities hit नहीं करता तो यही cash flows कौन से cash flows होंगे? Estimated cash flows या फिर expected estimated. Now what is the probability? The probability here is 0.02. This is 0.03, correct? Then we have 0.15. What is the next one? 0.15 again. 0.3, 0.2 and 0.15. So how should I assign the range of random numbers? How would you assign this? See friends, first of all, you just ignore these values which are there in decimals. So 0.02 is 0. So you just ignore that. You simply say that it is 2, 3, 15, 15, 3, 2 and all. So now when I add up all these values, that is 0.02, 0.03 and all, add up these values, I will realize that these totals up to 100 in numbers. That is 2 plus 3, 5 plus 15, 20, 35, 65, 65, 85 and then we have add up the 15, that's 100. That means in my calculation I would require 100 numbers, 100 random numbers here for my calculation for assignment of these random numbers. So how would I assign it? Your random numbers will start from 0. It will start from 0 to, we can say 0 itself is one number, 0 to 1. So there are two numbers now here. So this 2 is representing these two numbers, 0 and 1. The next number is 3. So I have to add 3 numbers here. So this is going to be 0, 2 to 0, 3, 0, 4. So there will be 4 numbers here. Are you getting this what I'm doing? I'm just assigning the range of random numbers, friends. अभी आप मुझे बताइए next case में कैसे assign करेंगे? So now what you can do is 15 है ना, तो we need to add 15 here, so we'll add 15 here, so this becomes 19. So from 0, 5 onwards to 19 numbers will come here. Then next is again 15 that needs to be added, so you can take this as 34. So 20 to 34, the 15 numbers will be incorporated here. Then here we have 64 and that means 35 onwards till 65. This is the range for this cash inflow. Then this is going to be 84, 65 to 84 and then I would say 99 and 85 to 99 onwards. So what I'm doing is I'm assigning the range of random numbers. What's going to be the use of this, that we will understand in a while. But what I've did is this is range for random number, range for this variable 10,000 cash flow. Range of random number from 0 to 04 is 15,000 for this cash flow and so on. This is what we are doing here. But that is not the only variable given. We do have other variable and that other variable given is the project life. So let us now assign random numbers for this variable project life. Now what do you expect? We expect that the life of the project could be either 3 years or 4 years or 5 years or 6 years, 7 years, 8 years, 9 years and 10 years. So this is what we expect the life of the project to be. And it has its own probabilities. The probability is 0.05. So we have 0.1, 0.3, 0.25. Then we have 0.15. 0.10, 0.03 and 0.02. So if I ignore the values before the decimals, and if I take total of these absolute numbers, then the total of these absolute numbers is going to be 100. That means I will require 100 numbers here. If suppose that the probability was given up to say 3 decimals, so suppose this was up to 3 decimals, so then when I take the total of these absolute values, then it would have become 1000. So we will require 1000 numbers ranging from 0 to 999. So that works that way. If it was only up to 1 decimal, then it will be 0 to 9, so that will be 10 in numbers. So that depends how many numbers we'll require. That depends upon how many digits are there after the decimals. So if I now tell you guys, assign the random numbers here, chalo bolo, get me the range here. So we'll start with 0 to 4. So that itself is one range. It has 5 numbers, 0, 1, 2, 3, 4 SA. So now next is 10. So I will have to add 10 here. So this becomes 14. So from 5 to 14, the random numbers will fit here in this range. Now there's going to be 44. So 15 to 44, 69. So 45 onwards till 69. Then 84, I guess, to 70 to 84. Then 94. So 85 to 94. 97, so 95 onwards till 97 will be this range, and then you add 2 here, so this is 99, and 98 to 99. So when you have to follow random numbers simulation analysis, then you have to first check ki which variable is given and against which variable probability distribution is available. So using that probability distribution, we have to first assign the range of these random numbers. Now I will explain you what exactly is that table that they have given. Below that cash flows and project life, some numbers are given. Those are randomly generated, friends. If you can check, random. First number generated is 53,479. Now we don't have any control on it. In Excel, you can actually get random numbers. So might be they must have taken this from Excel. So we don't have any control on it. And now the question says, calculate NPV for each run. Now how will I calculate? Let's understand, friends. Let's understand. So we have calculation of NPV. How will I calculate? How do you think I should calculate this NPV here? Now you can select any number. If you refer the solution given by the institute, what they have done, for every number they have selected only the first 2 digits, ignoring the remaining one. Matlab, let's take an example. So if I do take the first trial, so I have trial or set number 1. So in first trial, the number that came out from Excel was 53,479. So what they did, they have only selected the random number first, 53, ignoring the remaining decimals. This 53 random number, they have assigned it for cash inflow. Now tell me, 53 if it is for cash inflow, 53 if it is for cash inflow, तो cash inflow किधर दिख रहा है 53? चलो देखते हैं. हम लोग ने range बनाया है for random numbers for cash inflow. So 53, 53, 53. Can I say this is 53 here? It is somewhere lying between 35 and 64. So it is quite possible that if you launch the project, see, understand the analysis of simulation. It is quite possible कि एक बार मैंने प्रोजेक्ट लॉन्च भी कर दिया ना, तो it is possible कि मुझे 30,000 का कैश इनफ्लो मिल सकता है एवरी ईयर. अब कितने इयर्स तक मिल सकता है? तो the life of the project could be either 3 years, 4 years, 5 years. So the project can have either a life of 4 years or 5 years. If I launch the project, demand is great, so then it can have a life of as high as 10 years. Flop हो गया तो ये प्रोजेक्ट का लाइफ 3 years भी हो सकता है. तो अब मैं क्या करूंगा? I will now again assign one more random number. This time the random number is for project life. So if I now take, I will take immediately the next number, but only the first 2 digits, friends. Only the first 2 digits, and that's going to be 97. So this 97. Now let me check. I have assigned it for project life. So project life 97 किधर fit हो रहा है? ये रहा. It means when I launch the project, it is quite possible that I may get 30,000 every year for a period of how many years? 9 years. So now the life here becomes 9 years. Now, if I get this cash flow every year for a period of 9 years, it takes form of an annuity. So if it is taking form of an annuity, what will I do? I'll multiply it with PVAF, and the cutoff rate is given as 10%. Yes, at 10% for a period of how many years? For n years. That will change on the basis of the random numbers. So what we'll now do is 1 divided by 1.1, and that is coming to 5.759, and then I'll take the PVCI. That will be calculated as 5.759 into 30,000, and that's giving me 1,72,770. How would you interpret this, friends? It is quite possible that if I launch the project, कुछ भी हो सकता है. Do you agree? कुछ भी हो सकता है. हाँ, तो कुछ भी होने में क्या है कि मुझे लगता है कि every year मुझे 30,000 मिलेगा, but कितने year के लिए? मुझे लगता है कि it can come for as high as 9 years. So when I calculated the PVCI, this was my PVCI, but my object is to get the NPV. So what will I now do? I'll subtract the PVCO, and then I'll get the NPV. तो PVCO कितना है? Cost to the project होगा ना, से same ही रहेगा. That is 1,30,000. So here my NPV comes 42,770. So it is quite possible that I may get an NPV of 42,770, and that you can check it from the suggested answer given by the institute as well. Now I will take up another 2 trials for better understanding. So now my trial number 2, set trial 2. अब I'll jump to the third number, sorry. So that is 66,023. Last के 3 digit हटा दो, because अब इसके लिए there is no rule कि भाई first 2 digit ही लेना है. नहीं, you could have taken any 2 digit because they are randomly generated. You don't have any control over them. So I would now take 66 here. So we are following what institute has done. Now 66 I have assigned it for cash inflow. किधर फिट हो रहा है? तो आपको क्या लगता है? If you launch the project, क्या हो सकता है? 35,000 भी मिल सकता है. अच्छा, then immediate next number is 99,776. So you take only 99 for the first 2 digit, and then 99 किधर fit होता है? Which has given me a life of 10 years. So this will be, I think, 6.1446. So 35,000 into 6. It's giving me 2,15,061. 1,30,000 इसमें से subtract करो तो ये आपको NPV दे देगा. So that's going to be 85,061. Same exercise we have to do for each run, each trial. So, but we will restrict it for 3 trials, so that our job was just to understand this. Now in the third case, if you realize, it's 30,170. So I'll keep 30. So random number for cash flow assigned is 30. 30 किधर fit हो रहा है? 25,000 में. So मेरा cash inflow कितना है? 25,000. See, 30 fits here. I have assigned the range of random numbers on the basis of the probabilities. 30 fits here, so I can get 25,000. So when I launch the project, I can get 25,000 as well. But what about the life now? 81. So here you have considered a random number 81. 81 कहाँ fit होता है? Life can be 7 years as well. So now I'll take 1 divided by 1.1. 1, 2, 3, 4, 5, 6, 7. Then add it up. So this is 4.8684. So into 25,000, that's going to give me 1,21,710 minus 1,30,000. So that's going to give me 8,289 negative. तो ये हो गया 1,30,000. Negative 8,289. So that exercise you can do it for n number of trials. Even institute has restricted itself for 10 trials because this is going to be a tedious task, definitely. So these are going to be the ways in which we calculate NPV for each run using the random numbers. I'm again telling you, these are randomly selected. You could have even done this way. Entire 5-digit number है. First 2 digit you could have assigned for cash flow. The last 2 digit you could have assigned for life, for all these things. So मतलब I would have said an example 53,479 है. यहाँ पे 53 लिख सकता हूँ, यहाँ पे 79 भी लिख सकता हूँ. Because these are randomly generated. You don't have any control over them. So these are randomly generated amounts. So this was a simulation analysis where we use a concept of random numbers, and रैंडम नंबर्स कंप्यूट करने के लिए सबसे पहले रेंज असाइन करना पड़ेगा. रेंज कैसे असाइन होगा? ऑन द बेसिस ऑफ द प्रोबेबिलिटीज. So I hope you have understood how did I assign these range for these random numbers, and then using that random numbers NPV has been calculated. So this was your simulation analysis, and we had only one sum in the module, so we have discussed that as well on simulation analysis. We now are left with only one model, and that is going to be the sensitivity analysis. So we'll be taking up the sensitivity analysis.